I had Ram saying like, wait.
Yeah,
wait,
I was like dancing in tune with like the weights. Yeah, hello everyone.
What is up, beautiful people? Welcome to Learn How to Trade, formerly known as Midday Show. That is your girl Adara. I am Sharif, and we're gonna wait. We're
gonna wait.
Yeah, there you go. I like that because I was saying that the other day. Yeah, we're gonna wait for the chat to populate and people to move over from the other stream. There we go. We got Callum, we got Rich, we got Juan, we got Big Manny, Dad Trader, Futures Trader Extraordinaire, Big Michael Lloyd gracing us with his presence, Maru, Ponzi, Dang, Fonzie, as well as Patrick Langlois. We got Big Adam DeLuce as well. And the names are moving too quick here. I can't catch all this. Jason, we got Sailor Moon. Yes, you know, I'm not going to sing today because I already sang one time. Trader Guru Ryan, Nylene. All right, Nylene, there we go. All right, that's enough of that. Guys, we are brought to you by Search Trader, account funding of up to $1 million. Keep up to 90% of the profit. Enjoy relaxed trading rules with an 8% max trailing drawdown on all new accounts. Shout out to the good folks there at Search Trader, who, by the way, still have their trading contest on for December. 100,000 fake smackaroos. If you win, you'll get 1,000 real smackaroos there. So shout out to them and participate if you like. Good morning, Adara.
Good morning. How are you?
Good. Thursday. You know, it's freezing. I drove to work, so, you know, no walking, no nothing.
Yeah,
we're all right.
We have not thought on Thursday right now. If we have anything, we're doing the opposite.
Isn't it supposed to be warm tomorrow? I thought it was supposed to see like 9 degrees or something like that tomorrow, which I would not mind.
I would not mind either. I have a problem where I do not like check weather until the morning, like as I am leaving my house, which is something we're trying to work on as a people. And when I say as a people, I mean myself, but it is what it is. Shout out to John H in the chat, $2 super chat. Time to learn, all caps, exclamation point. I love the message and I love the energy with which it was conveyed.
There you go. I like that. I like the English too there with which it was conveyed. The Katina man has confirmed that it is 9 degrees tomorrow. Guys, we have an easier lesson for you today. We've been talking about all week entries and exits in different scenarios. We talked about small cap gappers yesterday and how to get in and get out of those bad boys. We should have probably done it today because there's like an umpteen amount moving and it would have been a good day to show you, but that's neither here nor there. We also talked about how to trade these economic events, which was very apropos given the fact that we had CPI and Fed back-to-back Tuesday and Wednesday. Today, we're going to be talking about how to get in and get out using the most popular indicators for those bad boys. We've already talked about when we did the week on indicators. The only one that we haven't is stochastics, and we'll just give you a quick briefing about how to use that one, and we'll get to the stochastics later when we do that week on oscillators coming soon. So, before I start the lesson, I want to say that this is the very basic way to use entries and exits using these indicators. You'll see for the moving average, convergence, divergence, and the RSI that I have a bit of a different approach than the one being advocated here by this lesson, which I obviously took from a book. So we're going to be talking a little bit about that. I'll give you what the book says, and I'll give you what I personally would do in the circumstance, and then you can choose whichever one you like. Let's get right to it, baby. Moving averages, super easy, right? We talked about moving averages. We talked about the difference between the SMAs, the simple moving average, and the exponential moving average, EMAs. We explained that the simple moving average just basically takes a certain period, let's say the 50-day. It takes the value, the closing print on all 50 of those days, adds them all up together, and then divides it by 50, and then you get a dot plot on the chart, and then you connect those obviously over the days, and then you get a smoothed price action. The exponential, however, weights the more recent price action more heavily than the more historical price action. That's typically better for day trading, right, where the more historical price action is more important than what happened 45, 40 days ago, okay? So that is that's what I want to preface this whole thing. Let's bring in the side chart here with some moving averages so we can talk a little bit about that. Just allow me a minute. Looks like I have to set up my moving averages again, Adara. Oh, no, they're good. We already got them on. So this is view. Let's not look at this. Let's look at AAPL because what What a day for Apple yesterday and what a day today. Let me remove the 7 and the 20 because I don't want to talk about those. I want to talk about the 50 and the 200. So just allow me a minute to take these two bad boys off. And there we go. So you'll see 3 different lines on my chart. White is VWAP. We're always going to leave VWAP on there. We're not going to talk about it today, though. We're going to talk about the red one, which is the 50, and the blue one, which is the 200. Both are exponential moving averages. So how do you basically get in and get out? Very simple way using moving averages. Personally, I would not use moving averages on an intraday basis. That's just my personal choice to do that. I find that they are less respected than they are on the daily, okay? And that is just my personal feeling about it. Also, I want to tell you that moving averages, when you are looking for crossovers, like we talked about the golden cross and the death cross between the 50 and the 200, these are very bamboozling during consolidative markets. When the market is moving sideways, you get false crosses between these moving averages, and that can lead you into a losing trade. What you need to identify before using any sort of crossover on the moving averages is the market trending? Are we in a discernible uptrend, a discernible downtrend, or are we locked within a range sideways? It doesn't have to be a tight range as long as there's a discernible range where no newer highs are being made and no higher lows, or in the opposite direction, lower highs and lower lows, okay? So you need to identify the context in which you're trading, like I spoke about yesterday with respect to small caps. It applies equally here when you're using moving averages. So the simple way to get in on a moving average is to buy the dip. For example, here on Apple, once we started trending, this was obviously a bit of a sideways period. You can kind of see where really no discernible trend was happening. Then we made the lows in January of 2023 after a bad 2022. And then what happened? We broke through the 50, we retraced right back into the 50, held it to the T, and then you saw what happened after that. We started rocketing up. The same way we did with the 200. We come right into the 200, we do a little bit of a double bottom here in October, early October, late November, and then you rock it up. So the whole point is, when the stock price rises above a moving average, it indicates an entry point. And when it falls below the moving line, it indicates an exit point. That is not as simple as it sounds, but it is basically the most rudimentary way to use moving averages for dip trades. So you get in when you get in long once the moving average is breached, and you get out when the moving average is breached to the downside. I'm talking about to the upside. When it breaks it to the north side, you get long. When it breaks it to the south side, you get short. Not so simple, but just a very rudimentary way of using moving averages a day. And
so I'm guessing with regards to our other conversations about indicators, it's if it's interacting with it too, right? Like if it's not interacting with it with all these indicators, and we had that conversation, it's like, it's a good level. I think the way you put it that I found really helpful was it's always a good level to keep in mind, to be aware of, but if it's not interacting, don't make the decision, like don't go chasing waterfalls, right? Shut up to TLC. Yeah, if it's there and it's interacting, then yeah.
Yeah, absolutely. So thank you for adding that, because that is important. So the number one thing I'd look for, are we in a trending market? Or are we in a consolidative market? That's what I want to know right away. Second of all, what is the respect or lack thereof between that particular instrument and the indicator in question? If there is no respect, if it just blows through it to the high side and low side and never stops at it, never holds off it, rejects off it, bounces off it, what have you, any description thereof, don't use it. It's not being respected by that particular instrument, and therefore you should kind of steer clear of that particular indicator and instrument being used together. So that is basically as easy as it gets there for how to get in and get out using moving averages. BlackBerry asked, just to make sure, in what time frame would you identify the trend? The daily, when you're a day trader, I guess? Personally, I don't like using moving averages intraday. That's just my personal choice. I want to use something different. I like price action a bit more. But if you were insisting on using moving averages, I would look at a wider time frame, like something like the hourly, something like the half an hour, the 15-minute. Personally, I wouldn't use anything smaller than that, because a lot of noise with these moving averages during the. Basically, what I'm trying to tell you here is I use them more for swing trades rather than intraday trades, and that's just my personal choice. But you can do as you please, obviously. So moving averages as entry and exit. So again, just to summarize, you are, when the stock price rises above a moving average, it indicates an entry point. When it falls below the moving line, it indicates an exit point, okay? All right, Peter King, Sharif, is it safe to say that if the moving average is moving below VWAP, the stock is very likely to be on a downtrend? That's one combination of moving average and VWAP that I've personally never used. I don't even know if I've seen anything about that particular combination in the past. Maybe if there is, absolutely, I'd like to know about it, but I don't use those two together. What I typically do is look at moving different time frame moving averages of the 200, the 100, the 50, etc., and what they're doing relative to one another, as opposed to what the moving average is doing relative to VWAP. Hope that helps. All right, second thing. Moving average, convergence, divergence, otherwise known as MACD. MACD is a versatile indicator used to understand the momentum and trend direction of a stock price. In case you missed the week when we talked about MACD, or the day, sorry, that we talked about MACD, it consists of two lines. There's the MACD line, and the MACD line is the product of two different moving averages, the 12-day and the 26-day exponential moving average. That is the MACD line. And then there's the signal line. The signal line is simple. It's a 9-day exponential moving average. So you're looking for how those two lines conflate together. All right, so let's pull in the MACD. Or do I have my MACD chart, or I get rid of it? Here it is, baby. I got it. All right. Let's put in Apple, because we've been using AAPL today. And let's put in the ticker so that everybody can follow along. AAPL. What a week for Apple, bro.
It is not the dead one.
No.
It said holding an iPhone.
I'm very pleased.
Yeah, no, it looks beautiful. It's a great one.
It's a good. It's pretty good. Just hopefully it keeps going. All right, guys. So with respect to my chart, the MACD line is the down here. It is the the yellow one, and then the signal line is the purple one. Okay. When the MACD rises above the signal line, crossing it from the downside to the upside, it creates a bullish crossover. This indicates to traders that there is a buying opportunity and a possible entry point. Whereas when the MACD line falls below the signal line, it creates a bearish crossover. This indicates to traders, get it together, Sharif, there is a selling opportunity known as an exit point. One more time. When the MACD line rises above the signal line, it creates a bullish crossover and indicates a possible buying opportunity and an entry. When the MACD line falls below the signal line, it creates a bearish crossover, and this indicates a selling opportunity and a possible exit. Hope that is quite clear. This histogram here is just a visual depiction of what these lines are doing together. Actually, it's not really needed. It helps some people, but typically what you're looking for is what this purple line over here is doing relative to the blue line, crossing above it or below it. And also, we talked about a more nuanced approach to using MACD is the variance, the space that's created between the signal line and the MACD line. The wider the space, obviously, it usually typically mean reverts. And so something to be aware of there, that a possible sell could be coming. Now, the way that Michael Noss has taught me to use MACD and RSI is a little bit different than what I've just been saying here. What I'm looking for with MACD is price divergence. What am I talking about? Okay. Well, when the price makes a new high and it continues to make new high, if I don't see new highs, peaks and troughs on the MACD line, rather I see a lower high, I know that there is MACD price divergence. That is typically a leading indicator. It's not lagging, it's leading, that there could be a price correction coming. When there is divergence between the peaks on the MACD and the peaks on the price action, when there is divergence between the troughs on the MACD and the troughs on the price action, that is MACD price divergence, and it's typically usually indicating a future reversal in whatever trend is going on. So keep that in mind. That's the way that I was taught to use it, but the most basic way for entries and exits is the crossover thing. What's going on? So Microsoft is down $3. The Katina man, you're short 69s or something like that, right? Up, he's short 70s, baby. So we're already 366.60, and it's tanking, man. Microsoft down 2%. I was telling the Katina man earlier that there was a ChatGPT outage yesterday with OpenAI. Don't know if it has anything to do with what Softy is doing today, down 2%. It seems like a lot of these Mag 7 are retracing as well, but just be made aware that there was an outage on ChatGPT yesterday, so that may have some sort of effect with Microsoft. Anything to ask Adara with respect to MACD and entries?
Yeah, no, I think that the divergence is interesting. So basically seeing that divergence can kind of communicate, you're saying, as a leading indicator, if there might be some reversion?
Yes,
okay,
yes,
that's
because
really interesting. Yeah.
what's happening, Adara, when there's divergence between the MACD and the price is the price, for example, is continuing to make newer highs.
Okay.
Okay? So we get peaks and troughs on the price, and then we get a newer high. Let's just say we get a newer high. But we don't get a newer high on the MACD. In fact, the peak or the crest on the MACD is a lower high. So then you're having MACD price divergence. And that is a leading indicator that the price could be reaching its max and start to curl back down.
And so that's when you're going to be aware for a potential point of entry. So that's kind of how you can use MACD as an entry.
That could be a great short to initiate a short when there's divergence between the two. So yeah, absolutely. Yeah, you're bang on with that.
And would the same be true for exits as well? I'm guessing. So if you're seeing divergence, you're in a stock, you're like going to make you pull out.
Yeah, yeah, same thing. Depending on what your trade is and where you are and everything. I don't want to say a blanket statement.
Oh yeah, of course, yeah.
But yes.
Just like using for like help. Yeah,
yes,
for indication. Yeah.
Yes, ma'am.
Thank you.
Quick question here. I think somebody was asking me to look at something. Hold on. Where am I at? Ren, or W-R-E-N. I hope I'm saying your name right. Hey, Sharif, could you please explain what a point is? I don't know what you mean by point. Did I say point and not explain it? What I'm talking about when I say peaks are, you know, the top, the highest point in an area, like this. Come to the chart. This is a peak over here. That would be another peak. That would be another peak. And when I talk about troughs or lows, I'm talking about something like this, right? Where these are very discernible lows, these are very discernible highs, okay? And so what you're looking for is the highs being made on the price versus the highs being made on the MACD, okay? And you're looking for divergence. All right, I hope that helps. I think that's what you're asking, I'm not really sure. Red Del Papa, using indicators such as MACD only slow your progress to learning to read price action. That's just like saying going to math class slows your learning in English class. Disagree, okay? Amma Hamada, sometimes you say points and not dollars, so might confuse. Okay, gotcha, thank you. I will not do that. I meant, you know, the price, obviously I mean dollars. Blackberry, using divergence normally goes with a time of day, or price could go, okay. What? Using the divergence normally goes with a time delay. Price could go up, although the indicator shows otherwise, at least I think for RSI. Well, look, it's not something that you're going to get right away. So when you start seeing price divergence between the price and the RSI, it's not like you're going to get an immediate turnaround, but it's something to be aware of. So possibly what you could be looking for when that happens is the making of a newer low. Right, and that's could be, you know, if you're more risk averse and you want to get in, and you don't want to get in at the peak because, you know, the price is still trending up, you could wait for a new low to be made. Anything that really fits within your risk profile, do whatever you can to kind of be able to weasel that in there, so to speak. Does anyone say pips anymore? Bullet Sponge asks. I mean, I hear it said. I personally don't use it. I hear it a lot in Forex for whatever reason. I don't know why. People use. What's going on my monitor? Oh, okay. Well, it just decided to crash.
Oh.
Okay, maybe it's back. Okay, so I have to set this whole thing up again, Adair, so I got to send it to you, okay?
Yeah, no, I think it's interesting, too, with regards to what you were talking about with Red Del Papa in the chat. I don't think knowing, like learning, I don't think it's bad to learn indicators. Do you know what I mean? Like, at least from my perspective, I find them to be helpful because I think initially I was kind of the opinion where it's like, you know, VWAP is, you know, VWAP is like really important. You always have to look at VWAP for stocks, and that's not necessarily the case, right? I think learning how stocks interact with different indicators I think has been really good for me. But I also would say I'm still working on tape reading as well, right? Like I don't want to, I would like, you know, I think it's, it's like being ambidextrous. You know what I mean? Like you can maybe, that's a weird comparison perhaps, but like, you know, I'm not gonna, if I want to strengthen my left hand versus my right hand, which is my natural one, let's say like, you know, you're naturally more gifted at chart reading, for example, I don't think it's bad to learn, you know, tape. I think it's good to learn both. And I think, you know, like not being overly reliant on one or the other is maybe the better way to look at it. Also because it's up here, I'll talk about this Eli Lilly trade. This was, I can't decide if me getting back in was FOMO or not. I really hope not, but basically I got out way too early because I was kind of like, we went over $1 in, and this is a case where I think I was maybe over reliant on the tape. I saw that there was a lot of that, you know, strength around that 580.50 on the tape. I got in at 579.50, so I was like, you know, I kind of want to get out. But now it just looks like, when I look at this in retrospect, it looks like we're continuously failing this 581 area. Look how many ticks we have to the upside, or wicks, sorry, that we have to the upside that are unfulfilled, right? So if we have, now next time I'm going to wait, if we see this, you know, if we see we wick above, I want to see a candle close at that level. That's going to be my new out for this trade, because I'm trying to learn. That's why I got back in. I'm, you know, maybe it was FOMO. I guess we'll find out. But I think really why I got back in is I want to challenge myself and be like, Adara, you got in for a reason. You got out a bit too hastily. So you know, I want to give this another try on this, because I do think there is some strength in the short here. We're down 3+% on the day. We did not make a higher high. So I think that is my kind of rationale for this whole Eli Lilly trade, basically me saying that sometimes I think maybe I was a bit over-reliant on the tape here. So here we go. Joe Finero in the chat, I'm gonna try trading left-handed, it could work. Yeah, it was an analogy. I appreciate you, Joe, for hopping on that there.
That's hilarious. Okay, sorry, I just have to get that.
No worries.
I have one more to do here.
I really enjoyed that there. But yeah, also, so Trade Guru was asking with regards to what you were saying earlier. I believe it was Trade Guru saying, like, is this more of a strategy for small caps or mega caps? I know you were saying different moving averages sometimes for different stocks. I know like moving averages, or like, I think it's the 7 and 20 that you prefer for small caps.
Yes.
So I was gonna, like, I guess with regards to moving averages specifically, Trade Guru, I would say maybe like change what moving average you're gonna use if you're looking at a small cap versus a large cap. But I think as long, and again, let's wait and see if the stock is actually interacting with the moving average, right? Because sometimes they won't be, or whatever indicator you're using. But yeah, I think what we're learning here is, like, from my, and correct me if I'm wrong, but I think it's probably applicable to whatever you're trading. Yeah,
no, I don't think that there's a major difference here with small caps and large caps when it comes to this type of system. I'm not talking about using the RSI and the MACD or whatever, the moving averages to get in, get out of stocks. I'm talking about the divergence between them. I think it's pretty ubiquitous how it's used because it's something that is showing you that the buyers are running out, or the sellers are running out, or buyers are starting to overwhelm sellers, or vice versa. It's a leading indicator, and I think it's applicable in all scenarios. Not a hard and fast rule, one that you need to explore yourself. But I think, what's his name? Who is this person? Red Del Papa, he brings up a good point. He says, you know, people are looking for shortcuts. They want the quick fix. Learn price action first before you move on to indicators. I respectfully disagree, but you know, his experience may be different, where he gets overwhelmed using all this different, or he has experience with other people who were overwhelmed trying to learn too many things. Whatever the case may be, you have to kind of know your aptitude, what your ability to learn new information is like. It's not going to be the same for everybody. My aptitude is not the same as Adara's, and vice versa, and so our experience is going to be different. What I can comprehend in a day, she can comprehend in half a day. You see what I'm saying? So I don't think that there is one hard and fast rule, but I do respect your opinion, and thank you for chiming in.
Yeah, no, and thank you. Also, Red Del Papa adding here, not trying to cause problems, just my experience. We appreciate, you know, like discourse, and like different, and you know, I think it was a good thing to kind of get us thinking here, right, and get us talking about it. So yeah, of course.
Let's get to some other questions here before we move on. Andrew Salazar, can you explain to me how some stocks have not delisted? Mullen, for example. Typically, what happens is when they get that NASDAQ, notice that that they're not in compliance, that they need to be above that dollar. What they'll do is they'll do some sort of stock split, or they'll buy back shares, move it above the dollar, get it above there for a day or two, restart the clock, and then the whole thing happens again. I don't know exactly how Mullen survived so far. That's not really the topic of today's lesson, though, so I'm just going to have to gloss over that. But yeah, maybe you can do some research online. If you find it, let me know. All right, let's see anything else here. All right, and Reg is hilarious.
Yeah,
Sharif, indicators along with price action can give more confluence, Obi voice, he says. Yes, absolutely. Confluence, yes, of course. All right, let's move on, guys.
Yeah.
RSI.
Oh, hi, Obi.
The Kenobi
he was on the screen there for a second.
There he is. He's looking for the bang button.
That's very sweet.
That's awfully close to another thing, but, you know, whatever. Ooh. All good. Oh, there we go. All right, he's smashing the bangs there. Kill it, Kenobi. Where is my RSI? Do I have my RSI? I'm going to have to load that bad boy up. Okay, so let's bring in this one. And let me just, for 1 second here, get my RSI ready, which should be there. Okay, I guess it's not. So we're going to go relative strength index. Sorry, guys. While I set up here, apply OK. There we go. So RSI, let's talk about entries and exits using that. All right, relative strength index is another technical indicator. You guys can come to the chart while I read. I'm just going to put an Apple over here on the RSI. Let's put in the ticker, AAPL. Let's take out volume in this particular instance because we just want to look at RSI. RSI is another technical indicator that measures the speed and price change movement that indicates overbought and oversold conditions in the market. RSI is measured on a scale of 0 to 100. When the RSI is less than 30, it is considered an oversold stock. This means the price of the stock has declined rapidly and there could be the possibility of a reversal or going upward. On the flip side, when the RSI goes above 70, the stock is considered overbought. This indicates that the asset price has risen rapidly or possibly risen rapidly and suggests a possible reversal to the downtrend movement. To identify entry points, and that's what we're talking about today, to identify entry points, traders focus on less than 30 indicators, which is a potential buying signal for them. And for exit points, they focus on above 70 indicators, which indicates selling for them. This is assuming a long. So I get long when the RSI dips below 30. I sell when the RSI moves above 70. Very rudimentary way to use RSI, not the way that I use it. But this is the textbook definition. So let me tell you now how Michael Moss has told me how to use RSI, which is almost the exact same way as using it with the MACD. When you have divergence between the peaks and the troughs, between the RSI's peaks and the price actions peaks, the RSI's troughs and the price actions troughs, it typically indicates, it's a leading indicator that there may be a price reversal incoming. Let's look at the daily on AAPL. Let's see if we can glean anything over here. All right, this is an interesting area because what we had here, this is all of 2022. Anybody who remembers 2022 knows it was a losing year for tech, okay? So there we go. This is the low on Apple. This was the low on Apple in the end of December of 2022 when we got to that 125. Can you imagine I went long Apple here? Wow. Oof. Anyway, let's see if we can see any divergence between the peaks in the beginning of 2022. So we have this higher high over here around December 2021, January 2022. So we make a high around there. That comes into that 185 area. At that same time, we were well above the 80 area. And what we can do is, so we don't guess, we can put these horizontal trend lines on the RSI, okay? And then look what we had over here. This was another peak, a little bit lower. This takes us to April, March of 2022. And this was the beginning, this was the bump that we got from the war. Remember, we sold off into the war and then we bumped back up. This takes us to 180. But how about the RSI? So it's also a lower high. So we don't have RSI price divergence quite yet, okay? Here's where we start getting the divergence though. Look at this. This is a lower high. This takes us to 175. However, look at the RSI over here. It bumps back up into 83. So we're getting price divergence over here between the RSI and the price. So that's something that I would be looking for personally on how to use this. But again, the rudimentary way, just to reiterate, When the RSI goes less than 30, it is considered an oversold stock. This means the price of the stock has declined rapidly, and there could be a possibility of reversal or going upward. On the flip side, when the RSI goes above 70, the stock is considered overbought. This indicates that the asset price has risen rapidly and suggests a possible reversal or downtrend movement. To identify entry points, traders focus on less than 30 on the RSI indicator, which is a potential buying signal for them. And for exit points, they focus on price or on prints above 70 on the RSI indicator, which indicates a selling signal for them.
Yeah.
Anything to ask or say, and then we can just talk to the chat here for a little while.
You know, I think it's really interesting, and I think it's something I would like to learn kind of more about. So I appreciate going over these. Yeah, because I think also too, like, correct me if I'm wrong, because I know that still, like, these indicators are generally lagging, right? But is it because you actually have to see it go, like, hit that level before you buy or sell? Would that make it necessarily like a stronger indicator than like? So
when you do price and indicator divergence, that's a leading indicator, because we actually haven't had a move down in the price yet.
Oh, I see.
Think about it. The price just made a higher high.
Yeah.
But the RSI made a lower high. Okay. So we haven't had that move down on the price to tell us. So it's leading indicators telling us we possibly have a trend change. Oh, I see. Whereas everything else, like moving averages, if we're gonna do that, that's all lagging. That's all historical price action, right? Okay. So stuff involving divergences, so like, the price divergence with our RSI and the MACD divergence, these seem to be a bit more leading than divergence-related potential indicators. Absolutely. And of course, like, they're not still 100%, but it's interesting that things involving divergence with regards to entry and exit seem to be a bit more leading. Absolutely. Yes, I agree. All right, let's talk to some people in the chat here. First of all, Forrest Gump Jr., thank you very much, my friend, for the $1.99 super chats. Thousands of people meeting in the New York City for GME New Year's. Okay, cool. I didn't know GME was doing a New Year's party in New York City. Is that what you read there? Or am I just like completely out to lunch on that?
I mean, I don't.
Yeah, right?
Oh, it is? Okay, cool.
Okay. BlackBerry. I like the RSI, but the market seems to ignore it regularly for a long time. Using it together with divergence seems more sensible. Give it a try, my friend. Nothing foolproof. Again, everything that we're teaching you here should be back tested or tested in real life in the wild. But use fake money, guys. All right. I'm gonna say this again, unpopular opinion, but take it for what you will. You have no business using real money. If you can't prove profitability in the sim, you have no business using real money, all right? Moving down, UVDA, great. Big mistake new traders make is taking other trades. Instead of continuing to learn, make mistakes and paper trading your methodology. Trading is not cookie cutter. Couldn't agree more, my man. What? Okay. I'm gonna have to read these in my head before I read them out anymore. There's just too much risk.
Did you see Adam DeLuse's message?
No, I
think
didn't.
This is interesting.
Go for it.
So when we have a catalyst like FOMC and RSI is well into the 85 to 90s, what makes the market continue to explode upwards, as was the case yesterday till the close?
Yeah, you're gonna have outlying events, Adam. Yeah. I mean, like especially on FOMC days where there is a marked change in what the economy is discounting or what the market is discounting. Again, the market's a discounting mechanism, usually looking 6 months ahead. And when you have the Fed telling you that they're going to cut rates 3 times next year, you're going to have these outlying events. And so the methodology that we're talking about is not always going to be perfectly situated for every circumstance. I would say these economic events are one of those ones as well. So tough to see what the RSI is going to do on a day like this, on a day like yesterday, obviously. But yeah, that's the situation with these kind of big events that we get. Where was I here? Yeah, but thank you for your question, Adam.
Yeah, I thought it was an interesting one. There's also a Mr. Longshorts, the market can remain in overbought period, or overbought territory for extended periods of time. So yeah, that's a good point too, right? Like I think, maybe like, I guess the answer to that would maybe be like it's not a question, but I guess my response to that would be maybe like wait and see, right? And cross-reference with other indicators. Because like, what Adam said, I think this goes off of what Adam was asking, like sometimes the indicators are not, going to necessarily be accurate and things won't reverse when you think they will, right? So I think, yeah, maybe just being aware would be my takeaway from that.
All right. Peter King, here, very good statement, Peter, and taking the contrary opinion from me. Sheriff, I don't think one can truly hone your skill with fake money. The pressure that hits you when using real money is very different. I could not agree with you more, my friend. My position is a little bit different. If you don't have a system that's making money in the sim, what makes you think that you can go and use real money when it's harder because you have to include the psychological component? You haven't proven a system that works yet. Prove a system that works, and then take that step higher when you actually have to include the psychological component. To me, that's just the way I see it, but I don't want to keep going back and forth about this. I mean, everybody's going to have their own opinion, and I absolutely respect what you guys have to say. I'm just talking about myself here.
Yeah.
Let's move on down. We're now going to talk about stochastics, which I have to send to you for a sec because I don't have the stochastic indicator loaded.
Yeah, for sure. I can start talking about them, and there's also, I think, where was this question that was actually about this? That we can, oh yeah, John H. So many Johns in the chat, great times. John H. specifically saying, where are you now? I like using this stochastic RSI paired with RSI on my subcharts. Am I just being redundant? So that's his question. I mean, let's get into stochastic oscillator.
It's a little bit of a mouthful there.
Scholastic oscillator, no, I'm joking. But a stochastic oscillator compares a stock's closing price to the price range over a 14-day period. So it provides insights into potential overbought and oversold conditions. So it's measured on a scale of 0 to 100, real quick, shout out to Drake, but no, so it's measured 0 to 100, like the RSI, right? Because it's also, yeah, it's definitely interesting here. When it goes above 80, it's considered an overbought situation. When it goes below 20, it's considered an oversold situation. So it's like a larger, slightly larger range in the RSI, where you have 70 overbought, 30 oversold. So 80 overbought for stochastic and 20 oversold. To identify entry points, traders will basically focus on oversold, where the stochastic oscillator crosses above 20, and then focus on the exit when the oscillator rises above 80. So then actually, I have a question kind of off of this.
Go for it.
I guess with regards to its emphasis on closing price, is this one that you like using?
Look, I got to tell you the truth. I don't use stochastics.
Okay,
never used it.
Because I know it emphasizes closing price, and I know you're very into.
Yeah, well, you know how
price.
I feel about the closing price. But
well, it is important, and you kind of showed me how that is the case. So.
Because that's when the overnight money sticks around. The overnight money in my book is more committed money. But look, full disclosure, I've never used stochastics, but here is basically, it's the same look, where you have overbought and oversold conditions. So you could do what Adara just said, which is the more rudimentary way. You get in when it's oversold, you get out when it's overbought, or again, you could do the same thing that I was telling you about RSI and MACD, which is to look for that stochastic peak, stochastic trough, price peak, price trough divergence. That's what you want to look for. Okay, so with respect to my scale over here, there's nothing that I can discern from these extremes. I mean, like, look at this. I mean, this is the stochastics on the bottom. So these extremes here at 100 mean nothing to me, right?
Yeah.
Like, I wouldn't use this.
Because that's running up to the upside still.
It's at max.
Yeah.
It's like reached its max. So I personally, again, I don't have experience using this all that much, but what I would say here is to look for the less extreme peaks and see whether they're diverging from the price. Otherwise, it just, to me, this is way too noisy. Again, same thing though, overbought, oversold conditions. When it's overbought, you are getting out if it's a long, or you're initiating a short. When it's oversold, you are buying, or you are getting out if it's a short. So hope that helps. And let's move on to the last one, which is Bollinger Bands. This one we talked a lot about when we talked about channels, because it kind of helps create a bit of a rudimentary channel. Let's go.
Yeah, it literally is a channel, which is kind of cool, yeah?
Yeah. So let me just shut that one down, type in Bollinger, and get my Bollinger Band so we can talk a little bit about this. There we go. Apply, okay, and then here, let me make the lines thicker so that they're much more viewable. You can come to the chart now, guys, if you like. Here we go. Let me just make, so the top line is going to be this orange line. This dark orange line, there you go.
I like that orange.
Yeah, I like that. And then the yellow line is going to be the bottom line of the Bollinger. And then the middle one over here, we're going to make thicker so that everybody can see it. There we go. Oops, nope, didn't get that. Oh, there we go. All right, here we go, number 4. And this peach line, whatever, what color do you see there?
That's a
Ram,
it's
can
like
you see that color?
It's like,
the reason I'm teasing Ram, because like, I didn't say anything. Nobody knows.
I was going to say it's like salmon. It's like a salmon, yeah.
What color
Sean
do you see?
and I are on the same page.
What color is this middle line, Ram? We're waiting for a response from Ram. Fabian's like cheating for.
Fabian's putting the heat.
What do you hear? What are you saying, Ram?
She said white to light pink.
Okay. Yeah, okay, you're good. I have to agree with you there.
Yeah.
Okay.
Yeah, okay.
Well,
I was gonna say, I mean, it's the color that like the crayons will say is flesh color.
Right?
Yeah.
Okay. All right, let's move on. So, with respect to Bollinger Bands, the ups and downs of price action in trades is determined by the Bollinger Bands. There we go. Bollinger Bands consists of 3 lines, one for the upper line, the second for the lower level, and a third for the actual moving average. And this is this pink color that Ram said. This one in the middle is the 20-period EMA. That is the moving average. And then this is 1 standard deviation above and 1 standard deviation below. Okay? When the price moves closer to the upper band, there you go, it is considered by the market that it may be overbought. And on the other hand, if the price is closer to the lower end line, it indicates that the market may be oversold. Here you can find entry points. Here you can find entry points when the price moves to the upper band. It generates a bullish entry signal and is a good possible opportunity to buy them. Conversely, you can identify exit points if the price breaks below the lower band. It generates a bearish entry signal, which is a possible time to take profits or consider long positions. So essentially all you're doing is if you're short off here, off the orange line, you're taking profits when it touches the yellow line, or if you're going long, you're waiting for a touch on the yellow line and you're taking profits on the orange line. This is extremely rudimentary and it doesn't always work, okay? You need to tread carefully here, okay? Yeah. And it's supposed to be better for consolidative markets. Like we talked about moving averages where they don't work in consolidative markets. This is an oscillator, which is kind of the other choice you have when you can't use moving averages. Use this in a consolidative market. It is, I think, of little assistance in a trending market, because what it ends up doing is it just ends up sticking to the top line or the bottom line in a downtrending market, right? What you're looking for here is in the consolidative market, you want to know what the high end of the range is. Take a short off the high end of the range. You want to know what the low end of the range is in the consolidation range, and you want to take a long off the consolidation range. So typically, what I have been taught to use the Bollinger Bands for, or any oscillator in general, is for consolidative markets.
Yeah, I was going to say that this kind of seems a little bit scary, because if you get in, because you're like, oh, it's going to go, it touches, it's going to go to the upside. It could also break below, you know what I mean? Like I would say, like, what we were talking about too, different time frames. We were talking about this when we initially did indicator and chart pattern week, different time frames, and maybe look for confirmation in other ways on other time frames, right? So like, is there a lot of volume when we're moving up? You know what I mean?
You're always looking for volume.
Yeah, I was gonna say, I think that would be my takeaway from this, because as you were saying this, like right before you were like, this can be risky, I was thinking this looks very, very scary for me personally. Yeah. Because I wouldn't want to get in just because it's touching, because then you could be like, oh, it's gonna break below though.
Well, exactly.
Right? So I don't know.
And I would never use anything as in isolation.
Nothing is like set in stone, right? Nothing's 100%.
No, and not just about the fact that it's set in stone, but these are, okay, so technical analysis is it's a weight of the evidence. Okay.
I like the wording of that.
Yeah. So like there's legal standards. Okay. So
I was gonna say it sounds legal.
Yeah. So there's a couple of legal standards. I'll just give you a little bit of a synopsis here. There's something called the balance of probabilities, and that's basically if you can prove your case 51% likelihood, and then basically at a minimum 51% likelihood. Okay. And that's like the civil standards. So if I sue Adara for, kicking me in the back, and it's a civil suit between her and I only have to prove my case if I could quantify it 51% case. That's a very basic standard. And then there's a higher standard called beyond reasonable doubt, which is the criminal standard, right? And that's like you have to be 95% certain in guilt. So different standards. Now, what we're talking about with technical analysis is when you look at one particular indicator, it may point the evidence in one direction. When you look at the other indicator or other indicators, they may be pointing in different directions. So you have to take on the balance of the evidence, okay? No one thing is determinative, guys. You have to look at everything, and that's why, the more you know, the better, but it's a slow climb up the ladder, if I could say, because if you try to learn everything all together, you're going to overwhelm yourself. So take it slow and make sure that you're really understanding what's going on.
Okay, so I love the legal analogy there, because you were saying that you didn't really think that that the law was not applicable in trading, and yet you come up with that really nice metaphor. And yet, no, it kind of goes back to as I said, I was a criminology major. I watched a lot of Law and Order, and the one thing they always say in Law and Order is I only know what I can prove in a court of law.
Boom.
So I think maybe that's the same with like trading, right? You could apply that, like look at, do you have confirmation in other areas? Like, can you prove at least to yourself that this is a strong case.
Yes.
I can make a case for this trade. I feel comfortable in this trade. And then, do you have a plan for an out? Should it go against you? Should there be reasonable doubt? You know what I mean? To extend your metaphor, because your metaphor was good. I think I've made it a little bit muddier.
All right. Okay.
Also, people wanting to know why I kicked you in the back.
Yeah, Michael Lloyd was displeased about that. I didn't mean to use that analogy. I had no idea what else to say. But Adara breached a contract with me. That's probably a little bit better, less violent than a kick in the back.
Also, I like BlackBerry's comment. Indicators can also work as a backup for your perception. I like that. Like if you're kind of seeing a level, you can use it just to be like, as like I guess a double check, right?
Yes.
Maybe like a proofread, like.
Absolutely. I think it's again, don't put too much weight in any one thing, and make sure that you know all the uses for that particular indicator. Case in point, the different ways you can use MACD, RSI, and stochastics. There's the rudimentary way, and then there's more of the divergence way that Michael Nosh showed me. Make sure you understand all of them. And when you're looking at entries and exits using these indicators, look to see if they're all pointing you in the same direction, or some pointing you left and then some others pointing you right. If there is, what is the weight of the evidence pointing you in? Again, that's really what technical analysis comes down to, Adara. So, yes, I know there are so many indicators, Christian. I couldn't agree more. If you use too many, especially in the beginning, when you are learning, you will get a little bit overwhelmed. I couldn't agree more. And that's why you got to take this whole process slow, back test, prove to yourself that you know what you're doing by obviously taking trades in the sim, but I'm not going to go back there again. So that's it there. Any other questions, guys, with respect to what we're talking about today? Pretty simple stuff, really, not complicated like some of the other material we've been talking about all week and even last week as well. Very, very straightforward. But again, I want to really emphasize this is the very basic way of using these indicators.
No, and I think it's cool, like actually looking at these and thinking like, because we were looking at them in general, just how they work. But I think specifically for entries and exits, I think it's really interesting, especially the Bollinger Bands. I find like, we're not here to say these are like 100% tried and true, set in stone. A, it's going to depend on the instance, and B, it's going to depend on your comfort level, and C, they're not going to work 100% of the time. That would be kind of my takeaway from all of this. I think especially with the Bollinger Bands, because like I said, I got very nervous at the idea that you get in because it's near the low and then it breaks below, right? So I think like always looking for shout out to OB Confluence with other indicators, with other things that are going on in the maybe even the price action. You know what I mean? Because I'll do that sometimes if I'm in a trade or getting into a trade. I want to see like actually what are we doing price wise, like what prices in addition to what's happening in the chart, what prices are we sticking on to like glue? You know what I mean? Like suction cup, right? So I think sometimes it's good to cross-reference.
All right, guys, let's talk a little Tesla here, baby. Oh, baby.
Tesla.
This one rocketing up through 250. Here comes 251. This one is absolutely pumping to the high side, 4.8%.
Oh my
we could easily see 5% today on TSLA. Adara, we were talking about $228 yesterday. Now we're talking about $250. I don't know what kind of market cap addition that is in one one dang day, but it is absolutely skyrocketing here and holding VWAP to a dang T. Look at this. All the dips into VWAP today have all been bought up by TSLA. Here comes 251, HOD 250.99, 251 break incoming, question mark. Anyway, this is one of those ones where I really wanted to make the point that watch how the instrument is respecting or not respecting the indicator in question. This is a fantastic example of where the indicator is being respected. Every single wick dip on the VWAP on Tesla today has been bought up and it's held to a T. What a beautiful look for TSLA today. Ooh. And we've been seeing all these negative headlines come in about Tesla lately. Now, doesn't really matter. I guess it's getting bought up. And I read somewhere that Elon was selling some shares. Did you read that?
I think I did. Yeah, I think I read. I don't know when I read this, but yeah, I know it looks like Elon is. He's not Elon Tesla. No, I'm joking. But
Obi liked that one. Obi like never laughs.
Yeah, I was like, when I heard it, I was like, did I hallucinate the Obi laugh?
Yeah, no, he laughed. Oh yeah. Oh yeah.
Nice.
Yes, very pleased with this one. All right, there's a new
poll.
Yes, the Chilean Nightmare has put in a new poll in the chat. What is your favorite indicator, or what's your indicator? Not your favorite, I guess. What's your indicator? Is it moving averages? Is it MACD, RSI, relative strength index, or Bollinger Bands? Katina Man, which one would you choose of the four? The Katina Man is clicking MA, so I'm going to click it. Obi, what would be your favorite out of the four, my man? Moving average. So the Kenobi and the Katina Man in agreement that it's MA, baby.
Salad time.
Oh.
Woo! Suffer and succotash.
Where did I hear succotash last time? I think it was like a Seinfeld or something like that. Yeah. I'm trying to remember. Anyway, that's jokes. Toronto in one day. He says Sharif. Sharif, you're just saying my name, but you're not asking any questions,
so you said Toronto? Which I need to call out. You did not say Toronto.
I screwed
up there. You said
there.
Toronto.
Yeah, maybe when I'm reading it, it affects me.
Yeah,
I know. Sean's like, wow, Sharif. Like, you're not a real Torontonian, Sharif. Yeah, that's, hey, man, I can only do what I can. But, yeah, Adam. Adams is SCI. Oh, okay. All right. Okay, Adam. We're getting fancy. Shout out to Adam. By the way, Adam, the draw for Champions League, my man, coming up Tuesday. I'm hoping for a good draw. I definitely want somebody like Porto or something like that. So, Adam, hold on. Adam, is it first, like the group winners, do they play the number 2 in the group, or is it just like an open season where you just draw names out of a hat and it doesn't matter if you're first in the group or second in the group, you play whoever? Yeah, let me know, because I actually don't know that rule, by the way. I'm talking about Champions League, anybody wondering what the hell I'm talking about. Yeah. Anything that you're looking at, Adair? We have about 8 minutes or so before we restart the lesson, so we can talk some stocks right now, baby.
Absolutely.
Yeah, anybody who has anything you guys want to ask, non-topic related, throw it in now.
Yeah, absolutely. There was, who is this in the chat? Because I saw this and I laughed, and now I'm trying to find it. But yeah, if I find that, I will. That was really good. It was Eric in the chat, and now I cannot. If I find it out. Oh yeah, the best indicator is how wet is Sharif's beak. All you need.
Someone said the best indicator is Sean's energy, by the way, too. I saw that one as well. Katina, man, you're getting some love in the chat there, baby. But, Adam, thank you for that, Adam. I didn't actually know. Go ahead.
Yeah, no, Amazon looking like a bear flag over here, because we have kind of the rectangular movement and then a flagpole, perhaps. We're down on the day, so all of the basic things that you need for something to be a bear flag could be, you know what I mean, are kind of present. But mostly, I was in this Eli Lilly short, and so second time was a try on this one. First time, as I said, I got out early, I panicked, and I left. But here I stayed, and yes, I realized I did stay a bit shorter than I could have stayed, but and again, this is a paper trade, but A, there was some profitability there, which I enjoyed, and B, You know what I mean? I felt like yesterday I was talking about that meta trade I was in, like kind of in and out. And I do think I am at my happiest when I am at my scalpiest. So I was trying to get more into that energy again today. So this Eli Lilly scalp, when I just straight up scalped, was going better too. So yeah, we'll see. I'm keeping an eye on Eli Lilly, super down on the day. We made kind of a double bottom though. So we might have a reversion to the upside. I'm gonna keep my eye on this because this 575, 50-ish area holding pretty strong for Mademoiselle Lilly.
Okay.
There we go.
Jordan Smith opining in the chat. Thank you, Jordan, for your opinion, saying Bollinger Bands are better than all the listed. No one can tell me otherwise. Well, it's nice to know that you've made up your mind, Jordan. But yeah, thank you for your opinion, and thank you for really sticking behind your word there. I like a committed opinion like yours. All right. I want to look here at Apple because what we're doing here is we're getting into that yesterday's close on Apple, and you know how much I love the previous day's close right now. Oh, geez, these are brutal wicks. Okay, so I'm going to bring in the side chart here. All right, so we were doing a dance with no pants at 199 for a lot of the morning. All the dips below 199. You can look over here. We're being bought up. It looked like a VWAP dip buy. But I got to tell you, I feel there was looking at the level 2 during this time period over here, we definitely had some buyers at the 199 level and a little below, and you can see all the closing prints are north of that 199. We've now broken below VWAP, and we're coming into the previous day's close. Technically, yesterday's close, even though we ran in the aftermarket substantially from where we closed at, is 197.96, so a smidge below that 198 level, and we're coming right there right now on Apple. Apple technically flat on the day, so what I'm looking for is a possible support level here as we come in to the previous day's close. Not saying we're going to get one. That's the thing. We got to watch how it trades, but do we see what we see like at these 100-point levels when I talk about the future and wicking into 16.8 yesterday, all the dips into all the wicks below, into that 16.8 level all bought up, and then we ended up getting a 16.8 hold. Do we kind of see that same thing here on AAPL at 198? We'll have to wait and see. I'm not going to jump into this trade willy-nilly. I want to see it curl up and get it on the back end, as my friend Neil likes to say. Speaking of Neil.
I pity the fool that doesn't hit the like and subscribe button.
You know what I like the best about that? His face at the end.
Yeah, he does the Mr. T face.
Yeah. He's fantastic. Shout out to Neil.
Like I love also like.
Uh-oh.
Is it Wells Fargo in here?
Do tell, Katina man. Do tell.
Sorry, I spoiled because I saw the chat.
You saw it already? Okay,
yeah, I saw it in the chat.
Oh, he wrote it in the chat? Okay. The Katina man is short or long? I'm not looking at Wells Fargo, so I have no idea. Long.
The banks are.
The banks are pumping.
Yeah.
It says on the top. Yes, sir. The Katina man has instructed me to read what's on the sticky note, top left corner. Buy bank dips. WFC. Yes, sir. He's instructed me to call up the Wells Fargo chart.
Please, I like the please. I like that there was like a please.
He's very polite. He's very instructive and polite. Yeah, it's absolutely rocketing up here. The Katina man is long. I want to say, you bought the dips, so you're long 48.75. 48.81. All right, yeah, I'm a couple of pennies off here. There we go. Shout out to the Katina man there. The bank's having a great look. In case you're wondering what the hell is going on with these banks, here's the look with the banks, guys. And I was talking to Brendo about it this morning. He brought up a really good point. I'm like, Brendo, weren't the banks supposed to do good in a high rate environment because they could charge higher rates for some of the loan products? But the truth of the matter is these banks were loaning out, were basically sending out huge loans during the COVID pandemic, basically at 2 and 2 and 3%, and now they're having to pay out interest on the savings account at 5%. So there's a negative between what they are gaining from their loans, all the loans that they gave out, and what they actually have to pay out. So it creates a bit of a balance sheet problem. So I think that they can't wait for these interest rates to, to go back down so they could lessen that margin pressure there. So we'll have to see how the banks do, but good look for the banks today, Adara.
Yeah. It's a beautiful look. I was looking at Morgan Stanley as well earlier today and just now. We just made a newer high on this, but I am not going to get involved in this until I have, I like to get the dips. Also, maybe I am crazy, but this looks kind of like, in retrospect, like a bull pennant. because we had this big flagpole to the upside, and then we had some, some compression happening here, and then we swooped up. So yeah, really nice look here on Morgan Stanley. So I think this is an interesting look as well. Still looking at Eli Lilly. If we continue this double bottom setup, I'm waiting for another green candle, and then I'm getting in a scalp, and I'm probably going to get out at that 577 because that seems to be a big area. We had a lot of resistance going back down. We had a lot of strength going back up. I think 577. Oh, there's a little scalp definition now to trade for small gains.
Oh, I love it.
I love that.
Chilean Nightmare is killing it today, bro, on the ones and twos. All right. Juan Alejandro Castillo asks a really good question. When you talk about underbought, sold, what are we talking about exactly in relation to what? So what I'm talking about is the levels that are being given on that particular indicator. So here, let's load up the RSI. I've taken it off here. Let me put it back on. I should be able to do that without an issue because I have it ready. There we go. So put RSI, apply. So look at this. If you're able to see this, let me make this line thicker so that you're able to see it better. There we go. So this purple line over here, this graph, see these numbers, 1, 80, 60, 40, 20. So, it goes. This is what RSI was made for. When the RSI goes above 70, it is said to be overbought. When the RSI goes below 30, it is said to be oversold. Very straightforward. Now, I don't want you to take this as like, hard and fast that you buy below 30 and you sell above 70. It's not so simple, but that's what I'm referring to. I'm referring to these numbers here on the relative strength index, which is an indicator you can add on your charting software. Not sure what you're using. Almost all of them have it. And when I say oversold or overbought, I'm talking about where the RSI, in the case of RSI or stochastics, for example, relative to that particular index, the numbers on that index. And that's what I'm talking about there. It's in relation to the numbers on the index, not in relation to price. When I refer to price, I'm talking about the divergence between the patterns that are forming on the RSI. Like, look at these peaks and troughs here on the RSI. Yeah. It has its own little up, down, sideways, just like price, okay? And so I'm talking about divergence between price and RSI. That's personally how I use it. So that's exactly what I'm referring to there. Hope that helps.
Yeah.
BlackBerry. What is the normally tolerated distance between EMA 200 and the current price? When will the distance get too big? I don't think that there's a rule for that. Not one that I know. But obviously, when the price comes in to the 200 EMA, I'm talking about the daily here. I'm not talking about intraday, all right, with respect to the 200. Obviously, when we come closer to the 200 from the downside, so say you're trending up, about to touch the 200, we look at that as a level of resistance, a possible level of resistance, not a hard and fast rule, okay? And so what you're looking for there is to see whether or not you can breach it. And if you breach it, there's a couple of rules that you can apply. I've talked to you guys about this before. It's called the 3% rule. So you're looking for a closing print 3% north of the 200 EMA on the daily chart. You can also use the 3-day rule, where you want 3 consecutive days of closing prints north of that 200 EMA. Exactly the same way when you are trending down into the 200 EMA. You're looking for the exact same thing, whether or not you can hold that level, and if you breach it, are you breaching it by 3%? Or if you want to use a different rule, the 3-day rule or the 3-candle rule, whatever, below the 200 EMA. So that's what I'm talking about. I don't particularly look at the distance between the price and the 200 EMA. The one that I look at the distance between is the distance between the 50 and the 200. When they're really extended, you can kind of get an idea. Possibly there might be some price reverting there. Also, on the signal line and the MACD line, you're looking possibly for the distance between the MACD line and the signal line and how far they are apart. So I hope that helps.
Yeah.
All right, you want to take it from the top, Adara?
Yeah, let's go from the top. So to begin, we have all of our lovely little indicators we shall chat about today, 5 in total. And the first one is moving averages, which we're just kind of chatting about there. So it's a very popular, but kind of a slower moving technical indicator that we use to identify entrance and exit points. So it calculates the average price of a stock for a specific period and then filters out all of the data and the short-term fluctuations, and provides a clear trend direction. So we have the simple moving average, which is just is basically the simple moving average is just like that straight up average. So you take the amount of days that you are. So if you're 50 days, you're going to take the price action and divide it by 50. That's how many days you're doing, and that's your 50-day moving average. But the exponential moving average will put more weight on the more recent price action. So that is, still a lagging indicator, but it will put some more weight on the more frequent price action there. And when the stock price falls above or rises above the moving average, it indicates an entry point, or it can, if it is interacting with the moving average more. And then if it falls below the moving average point, it can the moving average line, it can indicate an exit point for traders. So very much of interest there. I can pull up Tesla. I have Tesla up. I can kind of show this here. So we had Tesla kind of above the moving average here. Then we kind of made slightly lower low, and then we dropped below the EMA. I have the EMA up here, right? And then right as we kind of rose above that EMA around 1120, we just had that full swoop to the upside, right? So this is actually an example, a bit shorter term, but an example here intraday of how we really have that movement kind of around this EMA, and how that movement above really was, in this case, a decent buy signal. Like, we were up on the whole day, but we did have, as you can see here, when we dipped below, we did have a slightly lower low, right? So I think it's kind of an interesting example here that, just I have up right in front of me that kind of ends up working out here with Tesla, with the moving average. So, and then we also have MACD, which is the moving average convergence divergence. So this is a versatile indicator used to understand the momentum and the trend direction of a stock price. So it has two lines. So the MACD line, which is the difference between the 12-day and the 26-day EMA. And it's the EMA because we're going to put a little bit more emphasis on that. It's not the E is not for emphasis, for exponential, but the exponential moving average, because we have a little bit more emphasis on that more recent price action. So you have the 12-day and the 26-day exponential moving averages Those are two of the three MACD lines, and the third MACD line is the 9-day exponential moving average of the MACD line. So then when the MACD rises above the signal line, it creates a bullish crossover. So I actually have the MACD on my Tesla chart. I'm going to see if I can pull this up a little bit here. But as you can see here, we kind of, right before we actually had a little bit of a pullback, this Tesla is actually pretty solid as a MACD example. So we did have some divergence here, because that can signal a possible reversal. So we did have that movement to the as we got there's some strength on Tesla here to the upside. We did have a bit of divergence here on the MACD, so I just think that is of note. Just wanted to pull that up here as well. The other thing with MACD, so when it rises above the signal line, it creates a bullish crossover, and this indicates that traders can get buying opportunities or entry points, because we're talking about entry and exits all week, right? But if the MACD line falls below the signal line, it creates a bearish crossover, and that can indicate a selling opportunity or an exit point. That might be the time to exit stage left, So just that's kind of the MACD take here. Then we have RSI, Relative Strength Index. So thank you for switching the topics. So this is another technical indicator which measures the speed and the price change movements that indicate overbought or oversold conditions in the market. So it's measured of a scale from 0 to 100. So when it's less than 30, it's considered an oversold stock. So this means that the price of the stock has declined so rapidly that there could be a possibility of a reversal to the upside. Like, you know what I mean? So it's looking at, it's kind of interesting to think about it that way, when I'm just kind of like actually thinking, it makes sense. Like, if we moved downward really quickly, it could be a sign, we can't really hold this. And then they could move back to the upside. But on the flip side, when the RSI goes above 70, then the stock is considered maybe overbought, because it's moved really quickly to the upside, risen very rapidly, and suggests a possible reversal or a downward movement. And so to identify entry points, traders focus on less than 30, which would be a potential entry signal or a buying signal for them. And for exit points, they focus on the above 70 indicators, which indicate a selling signal for them. But it's not always accurate. No indicators really are. But as we were saying, kind of those divergence indicators might be a bit more leading. You know what I mean? As we were kind of saying,
the definition
which is something I learned with regards to divergence being more leading today. So I really appreciate you touching on that. But it's not always going to be accurate, right? It was the RSI and Apple that you were showing me, right? With regards to how it was actually, if you're looking at that, it would have been fully considered overbought. But Apple was continued to be very, very strong. I mean, continues plural to present tense to be really strong.
Yeah.
If you have the RSI on this, it literally looks like we're continuously touching that overbought, and yet Apple continues in that upward channel.
But absolutely.
So I think, I appreciate you bringing up that example because nothing is set in stone. You have to look at indicators with confluence with other things. Sorry, it's a good word. I get why Obi loves it. But yeah, with confluence for other things in the market, right, before you make these decisions over here.
Yes.
But yeah, and then we also have the stochastic oscillator. Someone was saying in the chat earlier the sarcastic oscillator. Someone was saying, I was saying scholastic oscillator, but it is the stochastic oscillator. And it compares the stock's closing price to its price range over a 14-day period. It provides insights into potential overbought and oversold conditions. And it's measured of a scale of 0 to 100, like the RSI. And what I find interesting is the RSI, we have 30 oversold, 70 overbought, right? So the oscillator, the range is a little bit wider than stochastic oscillator. If it goes above 80, we're overbought, and if we go below 20, it's an oversold situation. And so to identify entry points, much like with the RSI, right? If you're oversold, if you're getting your 20, then that's where you might want to enter. And then for exiting, you want, if it rises above 80, it's like maybe a no-go zone. But again, if you're looking at something like Apple, that's not necessarily going to be helpful. Also, I have a question. So when it says 14-day period, do they mean, is that 14 like trading days? Sorry, stochastic oscillators, yeah. So.
Thank you, yeah.
So yeah, so with regards to the comparing a stock's closing price to its price range over a 14-day period, is that like 2 weeks, or is it like, because I know 2 trading weeks would be 10 days.
So let me just look here.
So that's just kind of what I'm curious about. If they mean like full 14 days or.
Yeah, it's like the ATR.
Okay.
Like, so average true range base is 14 days. That's what it measures it off. So stochastics, the mathematical formula for that is based off a 14-day analysis. And that's just, we're not going to go into the math derivatives of why it was made because it's just.
Yeah, I was just wondering because I was just curious.
Yeah, it's the same thing as average true range where the ATR is based on 14 days. And that's what the inventor or whoever made up stochastics, I'm assuming probably his name is Stochastic or something like that.
Maybe, yeah.
Yeah, I remember reading about it, like the John J. Murphy book, Technical Analysis of the Financial Markets, has all the formulas in there. If you're really math inclined and you really want to know how the formulas were derived, they're all in there for our purposes. And because I'm not a math major, that doesn't interest me. In addition to that, all the calculations are being done by the software program for you. So you needed to know, ooh, look at all that.
Ooh,
math
I love that. It's like that meme. And that guy's, and he's got all the math stuff.
Right. You need to know how it's done because it's all being done for you here. Unless you're really going to major in this kind of stuff. I'm sure Michael Noss probably knows all about that stuff, but we'll leave that kind of stuff to him. Magic Mike. Love that name. Adara, Sharif. I wrote an indicator using lagging indicator, which turned out to be kind of a leading indicator, but super noisy to read, still trying to make sense of it. Do it, my man. And when you kind of feel that you have a finished product, let me know.
That's really cool.
Upload it to TradingView, because you can upload your indicators. Yeah, you can make your own proprietary indicators on TradingView. I'm sure you can do it on other software platforms as well.
Don't give me ideas. I'm gonna literally try.
I know you're a math person too.
Yeah,
so.
I love math. I'm a math nerd. So this might be something I get caught up in. That's very cool. But yeah, no, I think to the person in the chat, was it Magic Mike? Yeah, that'd be really cool if it goes sorted out.
Yeah, absolutely.
Yeah. There's also, I like what 420 Bud Monster has to say in the chat as well. Also, great name, as always. Learn what you can, find what works for you, in all caps, and stick with it until it no longer works. Rinse, repeat, and know when to step back.
But be inquisitive, be curious, guys, right? I mean, if you're just going to stay in your lane forever and ever, amen, like, right? Like, I'm just doing a little prayer there.
Yeah.
You guys get what I'm trying to say, though, right?
Yeah.
I mean, I'm not saying adopt it, back test it, do whatever you need to do to figure out, is this something that you want to use? You know, it's just like, kind of, have you ever read Plato's Allegory of the Cave?
I have not.
No? Yes, the
Fabian
Chilean Nightmare knows what I'm talking about, baby.
Yeah,
it's about enlightening yourself. I'm not going to go through the whole thing right now, but it's just about becoming more enlightened. And if you don't reach out, if you don't look for new avenues and new ways, you're just going to be stuck in your lane, which is not a bad thing. I'm not trying to dog anybody who does that, but
all right.
Anyway.
Yeah.
You've got one more.
I do have one more. Bollinger Bands, double B over here. So the ups and downs of the price in traders or in trades is basically determined by the Bollinger Bands. So they consist of 3 lines. One is for the upper level, the second is for the lower level, and the third is for the moving average. So when the price gets closer to, I can try to pull these up here. So let me add these to my chart.
You want me to load them?
Yeah, do you mind? Yeah, sorry,
Bollinger Bands, right?
Yeah, the Bollinger Bands.
Yes, ma'am.
So also, we already have your like lovely color
Yes, I've got them. All right,
here.
there we go.
Also, earlier, I think it was Blackberry in the chat saying Bollinger Bands adding some color to the trading. So, and I mean, I gotta love a pun. I paraphrase that slightly, but I enjoy it. But yeah, so basically you do have 3 lines. So one is for the upper level, which should be that nice deep orange there that Sharif has. The second is for the lower level, that is that nice yellow. And then the third, last but not least, is this coral. I saw some suggestions of coral, salmon, light pink. That's the middle line.
Or skin, as Ram said. Yeah.
Skin. Yeah, this is the
flesh. Sorry,
flesh.
Incorrect word.
So that is the that's your moving average, right? So when the price moves closer to the upper level, it's considered maybe overbought. And then the other hand, if it gets closer to the lower line, it could be considered oversold. And so you can find entry points if the price moves to the upper band. It can generate a bullish entry signal and is a good possible opportunity to buy them. But you could also identify maybe an exit point if we break below the lower band, because it could generate a bearish entry signal, which is maybe a time to take profits or consider long positions. The other issue with that, though, as Sharif was saying, and as I was kind of freaking out about, is you might not want to get into something right at that lower band, right? Because then what if it breaks lower? Do you know what I mean? Like,
and don't forget that because it's an oscillator, right? What it typically is advantageous for is consolidative markets. When it's trending, it just like if it's uptrending a day, it just sticks to the upper band.
Yeah, that's kind of what we're seeing here on Apple, which is why I think it's a good example here.
Exactly.
And then if it's in a downtrend, I guess it would stick to the lower band.
Exactly.
Okay, cool.
Right, and so then you're looking for sideways movement where you're getting basically an idea using the upper and the lower band of what the range is and when to take a short, when to take a long. When it touches the upper band in a consolidative market, it's entirely different than when it touches the upper band in a trending market.
Yeah,
right?
And so the reason for that, if I may, so basically the reason for that is because you're more likely to touch the upper band in an upper trending market. Is that why?
No. Yes. It's going to stick to it.
Yeah, so basically, if you're in a sideways, I guess, because we kind of are sideways here earlier.
It's absolutely sticking to it since basically January of this year.
Yeah, so then you would kind of think you'd have to sell every time it touched, but it's like you don't because it's still moving in an uptrend.
Yes, so again, like when we talked about, Dara and I yesterday, when we were talking about small caps, and we're talking about the waves of small caps coming together, and you know, if it's a strong time for small caps, you look for that bull flag continuation. Yesterday, we had a perfect example of a bull flag that formed on ACAD that didn't continue. It's not the time for small caps. You're not getting that fall through. You need to be cognizant of the sort of the economic climate, the trading climate that you're in. If you are in a very sideways market, you have to know that you're probably going to rely more on oscillators than on moving averages. But when you're in a trending market, you're going to likely rely more on moving averages than oscillators. And that's just kind of what these two bad boys were made for. And I just wanted to make that point. Sorry, I didn't interrupt you.
No, I appreciate that. That was, I think, basically everything here on the Bollinger Band. So yeah, you're going to get an exit point if it breaks below the lower band or, you know, potentially a bearish entry. Bearish entry signal as well. Yeah, cool. But yeah, no, it's interesting to think about how certain indicators are more useful in consolidative markets and others are more useful in trending markets.
Absolutely.
Yeah.
All right, any questions, guys? Let me just look to see if we have any questions here. I didn't get a chance to see. Tony Price, it measures contradiction or consolidation or expansion when the bands widen. Yes, I mean, that's another very good point. When the band was widened, like when we talked about with moving average convergence divergence and looking at the MACD line and the signal line and the distance between them, or when you're looking at the 200 or the 50 MA or EMA, you're looking sometimes for the distance between them. And that's the same way when we're looking at here with the width of the Bollinger Bands, you're looking for extreme divergence between the upper and lower band. In a consolidative market will tell you you're likely coming into extremes. And so that's what it's used for. And I hope like we don't have to belabor that point. But anyway, let's see what we're doing here on the future, because we just got back into 16.8 on the future, and we rejected it. So this is very interesting, right? When we talked about how the wick dance, we need to do like a little candle wick dance over there. Where we get into, John. Hello, John. John's
like, where's the candle dance?
Yeah, where is it at? Oh, crap. Nicole Harris.
Oh, yeah,
my bad, Nicole. My bad. Shout out to Nicole Harris and Hotlanta. My bad, Nicole. I saw you there, but I got busy doing some other stuff, obviously. Hi, team. Can you check TDOC and the new AMC SLM use an indicator? LOL. Yes, ma'am. All right, let's have a look at TDOC. Let's start with that. Let's bring in the side chart over here. We're gonna look. Oh, hello.
Hello, Miss Kathy. How are you?
And Kathy was printing yesterday. She was printing heavy yesterday. ARK Innovation Fund was up big.
Coinbase.
Yeah, she's probably looking to reallocate it somewhere else.
That's true. Yeah.
Are you upset that she's selling?
No, I'm just surprised. She keeps, like, I saw this Benzinga, because I'm always on the Benzinga, as we know, had a whole thing today about how, like, Kathy, this is like, she sold on Tuesday, and then she also sold again yesterday. So yeah, kind of an interesting time here with regards to Kathy. I'll actually pull up ARK Innovation ETF. ARK is really up today too. Oh my gosh, what? Okay, ARK is actually not a bad look today. ARK is not looking even bad on the day. But yeah, so anyways, yeah, I know she's really into Teladoc. I am aware of that. Yeah.
Yes. Sorry, I was just yelling about the heat in here. I apologize about that. Yeah, it's getting hot in here. Did you listen to the hot in here thing that I told you about?
I forgot, but I really want to because I love NLE chopping.
All right. Okay, Nicole, let's get to work. Let's bring in, I don't want to use Bollinger Bands for this, so let's see if we can use RSI. I think that's probably a little bit better. Let's see what we get with TDOC on RSI, because Nicole wants us to use an indicator. Well, here we go, Nicole. So let's look at what TDOC's been doing price action-wise as of late. So let's start with, where is January 2023? It's right here. So sadly, first and foremost, we have lower highs. Right away, look at that peak over here at 34 bucks, Nicole. That's the peak. That was the peak in November of 2022, and then again in Feb of 2023. The other peak over here, this takes us down to 30 bucks, and this is in July. And then we just made a new peak over here, which is at 22. So lower high, lower high, lower high. In addition to that, we've been making lower lows, okay? Where you have a clear and obvious trough over here in January 2023. We get to 22, okay? And then we just obviously made a newer low there at 15. So we know that it's a downtrend. In addition to that, it is below the 200, okay? The blue line on my chart is a 200 exponential, and you had a clear rejection of the 200 exponential in July of this year when the market was booming to the high side. It's had a bit of a, I would say unimportant relationship with the 50 because it's been breaking down, breaking above, breaking down below the 50. So there's really been no respect by this particular instrument with this particular indicator. I'm talking about the 50. Now, let's see about the divergence between the peaks on the price action and the peaks on RSI, because that's what we want to look for here. So let's go ahead and chart the peak on the RSI in February of this year when we made that high. So there we go. So we have a 71, almost 72, because it's, 71 peak there on the RSI. That takes us, what, to the high in Feb. And then this was the other high that we talked about, the $30 high in July. Well, where the hell was the RSI there? No divergence between the RSI and the price so far, okay? Where you are getting a divergence now, my friend Adara, is currently. And the reason is, look, we haven't made a newer high on the price, not even close, okay? We got to break that 30 to make a newer high. I want you to look at this, okay?
Yeah.
See that $30 high over here?
Yes, yeah.
Okay, where are we right now? We just made a new high, but it's 22 bucks. But look where the RSI is.
It looks
above
like it's
that 71 area.
Yeah.
So you're getting price divergence. This is interesting, Nicole, because we could possibly be reversing trendy here to the high side. There's also this downtrend line, which is kind of also rudimentary as well. Very interesting here how when you're not making a higher high in the price action, but you are making a higher high on the RSI in the oversold territory. What's up?
No, that's just fascinating. Sorry, I'm just looking at this. Also, it looks like a crazy flat bottom for a while there. Like this price here.
Over here?
Like
yes, absolutely.
That's a flat bottom. So that would maybe be also an area.
23,
Yeah, 23.
Very good point.
Interaction then to keep an eye on because support can turn into resistance is what you've taught me. And we were very kind of close to that area of 23,
very
and I would say that is very much an area of resistance. That's
very
my
good observation.
Just to chime in there.
I really like that observation. Absolutely, because why? Because it was clearly a level that we held, and now we're curling back into it.
Towards it.
So do we find resistance at that level? That'd be very interesting. Hope that helps, Nicole. I think with the divergence there between price and RSI, you obviously have an attempt to reclaim that 23 support level, which is likely to act as resistance. So we'll have to see how this one comes into play, but it's really interesting here what it's doing on the day. And it's up big on the day anyway. I don't even know what the hell it's up. Let me just check quickly. TDOC. Teledoc, my dear friend Adara, is up 7.9 smackaroos on the day. So good look there.
Yeah. I also think it's interesting too, and I don't know if this is, I think it's, I don't know if it means anything for what it's worth. I think it's interesting how we're entering that oversold territory on the RSI as we're getting near that point of resistance, that 23. So food for thought there to kind of munch on. I don't know if this is actually like an ongoing pattern, and now this is something that my nerdy brain will kind of want to look at. But if there is correlation between RSI, because it's not like there is really a new high here, right?
No,
if there's an
certainly
indication
not.
between RSI and support and resistance levels.
Yeah, I mean, like you have a local high, but when you compare it to the July, we're not even close.
That's why I find it really interesting, and that's why I really like the idea, or not like, but I think it's interesting that we're getting near that previous area of support as we're getting high in the RSI.
Yes, ma'am.
Also, there's a super chat from Justin Richardson, and I've got it pulled up here. Can you look at GS? We can. Also, it's his first super chat, so thank you very much.
Thank you very much.
Sorry for the wait there on the super chat. Yeah, Goldman Sachs, I'll look at it on the intraday and the daily because I'm not sure what time frame, but on the daily here, great look along with all the banks. I would also argue sort of a bull pennant on this one because we had that bull flag or bull the flag pull, and then we had some compression-y movement, and then we had the swoop to the upside. So actually, if you want to look,
can you draw the trend line so that people can see it?
I'm also gonna math out the profit takers, but yeah, I cannot draw trend lines to save my life. So.
Can I suggest something for you?
Yes.
Can you draw? Can you use the other one?
Oh, so it's like the full pull. Okay.
Yeah. Because then it extends. Right? Now the one right beside it. There you go.
That one. Okay. Thank you.
So.
Oh, there.
No. So you always want to draw it at the peak that you want. So clear that one.
Oh, okay. Thank you for helping me with this.
No problem. Of course. Yeah, that's fine. Just delete that bad boy.
Yeah.
And then you want to click right at the top, right there, and now draw it. Okay. So then where you want to go with the closing prints, right?
Yeah.
So you want on that bad boy right there, on the top of the closing print. That's fine.
Okay.
You get what I'm trying to say,
Yeah, I get what
right?
you're trying to say. Okay. I just can't draw. And then, this one's way too. Thank you everyone for bearing with me here as I try to draw trend lines. But yeah, so, and then now I want the other one would be here, right?
Yeah,
that
just
was
click
the bottom
and then use the mouse to adjust. There you go.
There we go.
Bang, and then you get a break through that top and the continuation. So it should be, if you were to follow the rules, it should be the distance from the breakout point on the pole to the top of the breakout area.
Yeah.
Okay.
Should be what
there.
the flag pole.
Exactly.
So I'm just gonna math out this flag pole. So let's say we got in around, it's about 366.50, I would say, 380. So this is a $14 more or less, $13.50 breakout should it occur. So let's say, I would say we broke out around this 378.50 area. We're now at 385, almost 386. So we've got still about, I would say, this is like a $14-ish flagpole. I would say we have about $7 to go should this be accurate, but of course not all chart patterns and indicators are always going to be 100%, right? But I think this is of note with regards to what this pattern is kind of suggesting to us. Yeah, very good look on the daily on Goldman Sachs, Justin Richardson. And let me pull up the intraday. I mean, let's look at the daily chart. But yeah, these banks, as we were saying with regards to that Wells Fargo conversation earlier, beautiful. Yeah, this daily, like these breakout candles are nuts here on Goldman Sachs. But yeah, I mean, looks like we kind of broke this double top area here. around, like, honestly, we've been
more. Maximize your chart.
More?
Maximize your chart.
Oh.
No, that's zooming in. You can just maximize the chart.
Oh, here?
Go, so you can see more. Yeah.
Oh, yeah. Okay, thank you.
See when you do that? And then you can just go back to that size. Okay. All right. Interesting. What do you see from the previous? So high, lower high, and then lower low, lower low. And then if you were to draw a channel, this is a clear break of that. You've made a new high.
Yes,
see that?
We made a new high because it would have been, we almost had like a double top here. We made a new high. On the longer term, it seems like we could be in an area of importance because this 384 was kind of where we topped out earlier, right? So it looks like this break above this 385 could be kind of significant. Because I'm just looking at what we did here, right? Yes. So I mean, from what I can tell, I think that would be interesting. But you're right, like we definitely had a strong break of a downtrend here, and we have had been straight to the upside since December 7th. So it's been a good like last week, I guess, for Goldman Sachs here. Not a great look on the daily and a really, I think, important look. Let's see if we can kind of break above this very, to me at least, from what I can tell, this key area of this 385, 380 to 390 area here.
All right. D-Loaf, Sharif, need you to tell me, lock it in. Just got a qualifying session on TMS with Day Trade the World in before the clock struck noon. Going for a second on the day if successful. Level 3, come baby. Yes, my man. We're rooting for you, D-Loaf, man. Kill it. Obviously, he's talking about the campus program. In case you were wondering what he's talking about, I'm rooting for you, and keep me updated with the progress. Obviously, I want you to succeed. That goes without saying. Jack Burton, Sharif, how much divergence should there be on the RSI for you to enter a trade? Snow has a slight divergence on the 5-minute at what I think is a key level. So just offhand, I don't use the RSI intraday. It is more for me for a swing trade. I'm looking for daily prints between the divergence between the price, the closing price on the day, and the RSI on that particular day. I don't use it intraday, but I will have a look for you. What can't hurt, but you got to understand that the caveat that I'm talking about here. Let's have a look.
Great word.
Yeah, let's have a look at Snow. So we know Snowflake, obviously a cloud provider, and you know, an interesting company all around. Okay, so very clear consolidative area here at Dara.
Oh my gosh.
I can say so.
It's a flat bottom and a flat top.
Well, even if we don't have flat bottoms and flat, even if we have like a lot of zigzagging, you can say that there is a discernible range here. It's that 120 to the low side, and essentially that 190, 200-ish area to the high side. And it's been locked within that range for some time. So what does the fact that we're consolidative mean? Right offhand, if I determine that we're consolidative, what can I not use?
So you cannot use any indicators that work more with trending markets.
And those are? Moving average.
Yes, I was going to say moving average or RSI. Is RSI one?
No, RSI is oscillator, so you're using RSI in consolidative markets, okay?
Yeah, I was going to say Bollinger Bands you could use here.
Yes?
Yeah.
Yes, absolutely, bang. And RSI you can use here as well. So looking just at where we are on the daily on Snow, I don't care that we're above the 200. I don't care that we've had the golden cross and the death cross. Look at this. There's all sorts of bamboozlement here if you were to use the 50 and the 200 because we're consolidative and they give false signals. But what I like at Dara is that we're getting, number one, to that $200 level, the $100 area, or so it's a $100 level.
Yeah.
Okay. And then in addition to that, we are going to break, if we continue, we're going to break through the top of the range. That takes us all the way back to August 2022, so almost a year and a half worth of, you know, this area being a top. So right away, I know that if we break through this area, especially on a closing basis, it's going to be uber bullish. The future's pumping here, by the way. And Tesla's an absolute rocket. I can't believe how much.
Tesla's like driving its Cybertruck off into the sunset over here.
I like that.
Like, oh my gosh.
So that's number one on Snow. So let's now go and look at the, let's say 15-minute chart. We're going to start with 15. All right, he says he's looking at the 5-minute chart. So we'll get to that in a second.
This is not a bad look here. Yeah.
Right? So what I want to see right away, okay, well, let's look at the 5, see what he's looking at. All right, my man. This is obviously a peak from yesterday, so what did the RSI do here? Let's look, and then what we want to do is we want to draw the RSI right at that level. So that takes us to the 80.8 level, 89. Holy cow, 89.6. So it was a very extended territory yesterday. Today, though, the high at the 200 is a lower high than yesterday. Now, see, this is why I don't like to use this intraday, because, well, we're comparing today's RSI to yesterday. So we are not in oversold territory. So we did not make a newer high on that move up, at least not yet. Looks like we're having resistance at 200. So what you are getting is divergence between yesterday's peak, which is over here at that 197 1/3, and the RSI, which came in at 89, pardon me, and today's peak, which is topping out at 200, and the RSI is coming in at 67. So there is a price RSI divergence. Again, don't take this too seriously, because this is not where I use it. I use it on the daily, not intraday. So this may be, I'm not telling you to sell or to short, but it looks really interesting here as a possible short. You get that $100 level right at 200. We know that 200 is a resistance level going all the way back to August 2022, and now you're getting an RSI price action divergence on snow. So interesting look. Let me know how it goes. Obviously, again, while you're learning, you should not be using too much size, or you should be in the sim. Okay. All right. Let's see what we're talking about here. I really want to take a futures trade here, but I want to see what it does a little bit, because we're getting into VWAP. VWAP on the MNQ right now is at 16,818. We're just at 16,810. Katina, man, what's your look right now? Are you looking long or short at the moment? He's looking for Christmas presents. He ain't looking long or short. The man is busy. He's got kids.
Sorry, can you pull up the NQ chart? Because I think I noticed something, and I want to see if I'm...
Sure.
Sorry, I didn't mean to interrupt there.
Oh, of course. Katina man's busy buying presents.
I love that long or short Christmas. But yeah, look how much we've kind of danced around VWAP. That's a really clear area of resistance today for the NQ.
Yes,
yeah.
They've
like
all been
1,
rejections.
2, 3.
Yes.
So I just wanted to put that out there.
That's absolutely accurate, and that's why I've been hesitant to get in, despite the fact that we reclaimed 16.8. I need a little bit more proof that we're going to start trending to the high side. We didn't respect yesterday's close. We blew through the close. We blew through the 800-point level. So it's a bit sporadic, I would say, in the price action. We bottomed out here at 16,742, or say 750. A bit of a random area. Wasn't an area that we danced with yesterday. So to me, I don't feel like I have a great read on the future today. That's why I'd wait for a VWAP reclaim, especially since you pointed out very accurately that VWAP has been resistance when it's been retraced into. So good call on good call. 2 good calls today. You notice that flat bottom on TDOC and this on things. So I'm gonna have to smash some props there, baby.
Thank you so much. Yeah. No, I think it's an interesting look, and I'm just trying to kind of notice more patterns and stuff like that. Also, you just mentioned something, thank you, that I wanted to address. So you were saying, not address, but I'm just I have a question, I guess is a better way of putting it out. But so you mentioned with regards to yesterday's close, or with regards to the NQ, right? So I guess, is the close, because I know with indicators, they're not always going to be useful for every trade or for every stock, but they're still good to know. Is that the same with closes? Like, they're not always going to really factor, yesterday's close isn't always going to factor, but it's just good to know.
Yeah, I always.
I just thought of that, and I was like, I may as well ask that question. Yeah. Okay.
You want to do the Benzinga?
Yeah, that's why we're already here to shout out the lovely Benzinga. Hello, Elon. How are you doing today? But yeah, so Benzinga, we are brought to you by Benzinga Pro. Use the link in the description for Benzinga's greatest deal of the year, including 75% off Benzinga Pro, monthly subscriptions, now as low as $49.25. And so this is the everything terminal for retail traders. You just have to visit pro.benzinga.com and use the coupon code TTVNOV to save 75% off now. New subscribers only, and conditions do apply. But yeah, I mean, look, we've got Jerome Powell little face over here, shutting the door. We have Elon Musk looking like a cartoon villain. What are these hands?
But show him the Benzinga Pro, though.
And yeah, I'm going to show them the Benzinga Pro as well. I have this one up here to just kind of show you the Benzinga homepage. But this is what it's always right up here. It's so easy for me to pull up, and that is not even by design. It's just what I'm doing. I have Microsoft, I guess, searched right now.
So what are you in? This is the news blotter, right?
Yeah, this is the news blotter. And so let's see, I want to see Wells Fargo maintains overweight in KeyCorp. What if I want more details? Press on it. I have all the deets I need. And then let's say I want to view it kind of a larger story. What's going on? I just press this little thing. Now the whole story pops up. I love Benzinga Pro. As Sharif has mentioned, I use it very heavily. Yes. And that is the Benzinga shout out there. Yeah.
Ash, I don't see anything on Plug Power. I just looked at my news blotter. Doesn't look like there's anything today, but you know, a lot of stuff is running just because the market is strong, and you know, they've been beat up quite badly. Plug Power is up 14% today. Nikola is up 18%. Very strong names. I don't see any news on either. All the news headlines that came in were yesterday for Nikola, were yesterday for Plug, but EVs are monstrous today. Rivian, 11 2/3. Lucid, 14 3/4, almost 15 as I talk. F-Cell, who remembers F-Cell from the pandemic? I sure do. 13.5%. So it's been big boy rocket to the high side for EVs and clean energy names. FSR, Fisker also up 8%. Polestar getting a nice boost, 6.5% for Polestar. Even Bloom Energy is getting in the game, baby. BE is a ticker there, 7.89. So a lot of them are strong. You know, the Katina man was mentioning it this morning. He talked about the word rotation. I explained to you guys what rotation was yesterday, and it looks as if we're getting more of that like we did. What day was it? Monday when we got the big boy rotation? Was it Monday? When we had the NQ up big and all the Meg 7 were down. Was it Monday or Friday?
Yesterday.
Off that number yesterday, but there was one outlying day. I just forget what it was. Yeah, that's probably why. Yeah, so we're continuing to get rotation in these names and one thing I want to point out to you guys, if you're wondering, are we in a rotation and you don't want to do like a comparator between the Mag 7 individually and some of these other, compare and overlay the RSP, ticker RSP, which is the equal weighted S&P ETF, and compare that to the SPY, which is the market cap weighted ETF for the S&P, and look at what's outperforming the other. And if the RSP is outperforming the SPY, you know that there is rotation, okay? So that's one kind of method that you can use rather than doing individual stock comparison between each particular one. Casey, that was Monday. Thanks, Casey. You know, all the days they blur in together, and sometimes you just forget. Oh, sorry, Ryan, I forgot. My favorite one, not mine, Neil's. Shout out to the Neil. He loves MULN.
Really?
Mullen. Oh, goodness, yes. Yeah, he loves trading Mullen. But yeah, Mullen. I don't even have Mullen on my EVs thing.
Like.
Maybe I should give it a little bit more respect here. We're gonna put it on the watch list there because everybody keeps talking about it. Mullen 9 1/3. It's at a very, very hearty 13 pennies. I'm talking. Yeah.
So I guess it's Mullen, a break to the upside even further.
Yeah, I knew you were setting up for that one.
I had to. I have no self-control when it comes to puns.
Yeah, Mullen having a good day, guys.
Is that a double top I see? Sorry.
A little bit,
yeah.
But what do you see here?
I do see higher low, so that could be an ascending wedge and a break to the upside. Yeah, I think the issue too is I'm getting a little too caught up. I need to look at the bigger picture of all the chart, what the whole chart's doing, right?
Yeah, you're bang on.
We have double tops, but we also have an ascending wedge.
What Adira's talking about is higher low, higher low, higher low, flat top at 14. What does an ascending wedge? What's an ascending wedge? It is a continuation pattern. What does the price action that precede it need to be? An uptrend, mostly, okay? It's not a hard and fast rule, but it's the better one. So maybe here a flat top breakout on MULN through 14 whole pennies there, baby. Stop Console War says Mullen has a big day tomorrow with voters. Either way, next week Mullen is going to go crazy. They're doing deliveries and production as we speak with licensing. Thank you, Stop Console Wars. When Big Handy Randy comes over here, we're going to have him come in, maybe even talk a little bit of Mullen. Because he seems to know a lot, and he also knows about Faraday futures. Maybe I should.
Yeah, he loves Faraday futures. I know that. Also, I pulled up the Mullen website and car. I like this look.
You like it?
I kind of like this look. It's definitely not as bad as the Xpeng car that should not be named.
Remember that?
That made Ramin actively upset.
Oh yeah, she was disgusted.
No, it was pretty bad looking. But yeah, strikingly different. It's almost like distinctly different. Almost Obi saying there, strikingly different. Trademarked for some reason. But yeah, look at not a bad car. I like the gold.
It's a looker, eh?
Yeah, it is. I like the gold, and I like that sleek little front. It looks like a car in Cars, like one of the little talking cars, which is maybe a weird way to gauge.
Talking cars.
You know, like it has like almost like the eye kind of look here. It looks like it could be friends with Lightning McQueen. No, I'm joking. It is like a nice look though. I do like the look of this car. I have to say, and I like the, you know, as I like it. I like.
Cool.
It's a little bit sleeker than the cars I normally like, but it's not a bad look at all. Yeah.
Futuristic says, don't get me wrong, Mullen cars look good, better looking than Tesla. Hey, all right. Yeah, I know a lot of people that are not fans of Tesla's design, so you're not on your own with that one, Futuristic, but I happen to like them. I showed my parents the Cybertruck.
Okay.
And yeah, they almost vomited.
Because I know you're so excited about the Cybertruck, so I had to.
I said to my pops, I'm like, look, Pop, I'm like, when is the first time you saw the Cybertruck? He's like, when you showed it to me right now, right? So I said, look.
He's not a hype beast.
No, he's not. I said, I've been digesting the shape and the look of the Cybertruck for 4 years. Yeah, 2019 was when he talked about this, when the guy threw the baseball through the window. It shattered, right? We had a good laugh at the time. Now it's a real deal. So I've been digesting the design for 4 years, so it's grown on me. It hasn't grown on him. The man thinks it's absolutely hideous looking, but whatever. Edgar says, Adara, super funny. Chilean Nightmare, you don't like it? The Chilean Nightmare does not like the Super Truck, so the Cybertruck, so we're not
getting it. It's a nightmare for the Chilean Nightmare.
Bro, too much. Northwestern Canopy, ELF has been tearing over 50% on the swing. Maybe keep ELF and put on the shelf. 4200, dude. We already got one over here. We don't need more people piling in on with the puns. I'm kidding, of course.
I'm joking,
I find them very funny.
Thank you.
Let's have a look at ELF, the daily chart.
It's a beauty stock. It's a beauty company.
That's a rocket.
Yeah.
Look at this.
It blew past that earlier top because we had almost a double top there, and then we
Yeah, we did. We had a clear flat top at 140 on ELF. Good look, dude. Nice call out there, breaking through that 140 area like nobody's business, rocketing up into that 146.95 on the day. This is a looker, man, I'll tell you that. Who's calling me? My phone says likely spam, so maybe we won't pick up. But yeah.
Trust the phone. He's trying to help you out there.
Yeah, he is, you know. I think he got my best interest in mind. Like the phone has feelings or something.
It has your best interest at heart, right?
I'm keeping my eye on the future, guys. I know I haven't taken a trade today, but I'm really keeping my eye on the reclaim of VWAP on the MNQ, or the NQ, excuse me. I'm looking for a breach of that 16,820 area, even though VWAP is at 16,816. I'm looking for continuation in there. We bounced off the lows at 16,750. And we've reclaimed 16,800, but you know, very, very weak is this reclaim. So I'm waiting for confirmation, and then I'm going to weasel my way into a trade, hopefully here. We got higher lows and higher highs here, a nice channel forming, but we're still, you know, below that area, and I'd like to wait a little bit more, but I've definitely got my eye here on the future, Dara.
Yeah.
Got about 15 minutes before we have to restart the lesson. Back at 1 o'clock. Charlie Tapp says, join the Tesla party. I know I'm getting all sorts of FOMO here as Tesla. We should probably load up Tesla.
The Cybertruck zoomed off and left people in the dust.
There you go. Chilean Nightmare, come to the chart if you're able to, my friend. This has been the look on Tesla. It's been an absolute rocket, guys. We've been talking about a 240 low, 240.79 low. Now we're talking about a 253.57 high. We are at highs as we do that dance near high a day. It's almost up 6% on the day. We're talking about Tesla as it continues to move up. Where do we find possible resistance on this name? Tesla is always notoriously hard to chart, especially when you're looking for resistance and support. I'm going to say 255 is an interesting area. 255 takes us back to the high that we got to on October 18th before we tanked, as well as on November 29th. Well, no, not even. That's not even close. Yeah, it's going to be basically that October 18th day when we got into that 255 area and then made our way all the way down into that low of October 31st at 193 and change. So Tesla very strong, just can't get into it willy-nilly though. Ozan says 255 is a big dark pool and it should reject in theory. I also see, on October 18th as well, we obviously had a very big red day on Tesla back then, and that's a clear resistance level, so I do agree with you. Interesting question here from Futuristic says, are we finally getting a bounce here on AAPL? Looks like it. We didn't respect that 198 level on Apple, which was the closing print from yesterday. If you want to come to the chart and have a look at Apple. Sorry about this dark pool wick. I'll have to fix that in a second.
The Apple Daily is gorgeous.
The Apple Daily is fantastic, but you know, on the intraday basis, I was looking for a hold at yesterday's close. It didn't. In fact, it bounced off the 200 EMA on the 5, which is not something that I use. Just full disclosure there. We'll have to wait and see, but we're getting awfully close to me bamboozling a trade on the future as we get into VWAP. Do we reclaim VWAP here on the futures? Oh, I'm specifically talking about the NQ March contract, or do we reject? It's been a nice higher high, higher low upward channel off that 15,742 low, but I'm still waiting just a little bit before I get in there.
Yeah,
Nice.
Thank you, Ben Fishin, $9.99 super chat, and I think it's a really, really cool one. Adara, use ChatGPT to write TradingView indicators. Then when you get errors, just paste the error back into ChatGPT and it will correct the errors. It is so easy, even a Canadian can do it.
Wow, we're gonna have to hit that like so many times.
I love that super chat. I just got, you know, the ending was, yeah, there we go. Oh, Canada, indeed. Home of Lululemon, home of Drake, home of Degrassi. Yeah, what else can I say?
Yeah, I know, that's it. No, I'm kidding,
no, I'm
of
joking,
course, yeah.
But yeah, no, I appreciate that help there. Yeah, Bears versus Bulls saying, ouch. Yeah, Bears versus Bulls gets involved in the discourse here. But yeah, so much support here in the chat, everybody. Yeah, thank you guys, awesome show. Thank you, Guillermo Sanchez.
Appreciate you, man.
Yeah, also I'm looking at NVIDIA because it looks like we kind of had a descending little wedge here, like slightly. We kind of broke below the bottom. It's a smaller one, yeah, but also like lower highs, lower high, lower highs. And then also for the most part, lower lows. I'd like to see kind of what we do around this like 480 because we're almost about to break 480 because that was where we had, you know, kind of movement to the upside earlier. Also, I was in a Tesla scalp that I should address. We got 30 cents and I realized that looks really funny when you kind of look at it on the wider chart, because here is my entry, here is my exit, and here's where Tesla went. So I realized that we might have, like, you know, gotten out of the Cybertruck a bit early, but also, like I said, I'm trying to work on getting back into scalping because I feel more comfortable doing that.
Nice.
So I'm not gonna like lose any sleep over this. You know, I'm still learning, I'm still in the sim, and I like this trade. Also, Eddie R, Degrassi Junior High, that is older than Adara, right? I mean, it's
yes.
Yeah.
Way older. Yeah. That's from the 80s, girl.
Yeah, like but like the newer generation was actually the same age as me, so I think I got in it through the newer generation. But yeah, because there's so many generations.
Yes.
But yeah, but anyways, yes, this Tesla, I kind of want to see what we do here at 252.34-ish, because that would be breaking a newer low. So, yeah.
This is exactly why I didn't want to get in the future, guys. Exactly why I did not want to go long into the future. Look at this rejection off VWAP. Solid there. I mean, I should have been looking short there, Sharif. If you're not looking long, why are you not looking short? I'm just scolding myself here. Look at this move down on the futures. This is tanking off that 16,818 touch, a smidge above VWAP here, and then all the selling comes in, blowing through that 100-point level like it doesn't even matter. I'm talking about 16.8 here on the NQ. Down we go, and we break that channel of higher highs and higher lows decidedly. Do we find, though, support this time around at yesterday's close, 16,775? If we do, then we can technically say, okay, on the wider time frame, we've made a higher low, and then maybe looking to take that break where we know this is a resistance level. If it breaks this, I'm going to be very interested in taking it, especially after this rejection right now on the future. Interesting day so far. You know, I thought maybe we would have a few days of running higher with the Fed yesterday, and overnight I was looking to see what we were doing, and we were aggressive yesterday in our overnight move. We continue to trend up after 6 o'clock when the futures reopened, but giving back some today, no big deal, I guess. We rejected so hard. That was a bull trap, says Futuristic. Yes, sir, but this is why you kind of wait for confirmation before weaseling your way into a futures trade. I needed to see that VWAP get reclaimed on a closing basis before I was going to punch long into that. So strong was that move down that it actually brought Tesla down off its highs by $1.50. NVIDIA is... as Adara said, I think, you know, or somebody else in the chat said, NVIDIA is really kind of leading the way down here. Yeah. It's the most bearish of the patterns. I don't know if
that's my look here, but I want to wait and see because this was an area where we like kind of moved back to the upside pretty strong, this 480. So I'm trying to wait and see what we do at 480 before I make any decisions. I do not want to be too hasty. Shout out to Spice Girls, but yeah, yeah, I don't dislike this look. Someone was saying in the chat.
Who's your favorite Spice Girl?
Okay, I like Mel B, and I only say that because I grew up watching America's Got Talent, and she was a judge on that. Although I get a kick out of the whole Beckham saga because also, you know, we're going to talk about the Beckhams too because Disney and Nelson Peltz. So you're thinking, how do Nelson Peltz and Victoria Beckham connect? Because their children are married.
No way.
Yeah, so Brooklyn Beckham is married to Nicola Peltz.
Okay.
And so, yeah, so Brooklyn is Victoria and David Beckham's son. And then
Can you tell everybody who Nelson Peltz is?
Nelson Peltz is a Disney activist investor, and today Tria and his fund was like, we want 2 Disney board seats. I mean, they've been saying this for a really long time, but yeah. So today let's look at the Disney stock actually with regards to that.
Okay.
Shout out to Sean for bringing this up earlier today in the show, but yeah. So Disney, the stock not really reacting like too much to that. But yeah, Disney actually not a bad look, although I don't like that we didn't get this higher high. But yeah, so that's who Nelson Peltz is. And I will always get a kick out of the fact that Victoria Beckham and Nelson Peltz are like kind of related through being in-laws. So there we go. Yeah, someone's saying here, Renata saying, I don't like NVIDIA long today. Yeah, me neither. I would say, I think more of a short type movement. Also, there's Finch Jane. You can short Tesla, but be quick at the trigger. I was looking at Tesla like a decisive break below 252. I would not short it right away, and I would also be very nervous about that. But yeah, like look, we like this 252 is going to be kind of an interesting area here because we fully like had a swoop below. I want to see like a couple more red candles, but yeah, interesting look.
I like Edward. Edward, I don't know how to pronounce your last name. I'm sorry. I don't want to butcher it. Cybertruck looks like a fridge with wheels. You wouldn't be wrong, my friend. That was my first thought.
It's stainless steel, too.
The Chilean Nightmare is not hiding his disdain.
He's a Cybertruck bear.
For the Cybertruck at all. He does not like it, and he's not holding back any punches right now. Shout out to Fabian, and strong opinions there. Maybe if he sees it in real life, Fabian, do you think you change your mind? He's gonna hit the fail. There's Ram with her hoodie and there's Chilean Nightmare.
He's smiling, I love it.
We're having a good time. Guys, the future is tanking. Look at the move down on the future, guys. We just broke down below the closing print again yesterday. Absolute rejection of VWAP for the second time today on the futures. Very weak off that 16.8 area, again coming right back down to 16.750. We have an overnight or day low of 16.742, and it looks like we're moving right back into that area again, guys. So very pleased this punch that I didn't punch long through the break of 16.8, but more upset about myself that I didn't actually take that short. But that wasn't my setup, so I can't really be upset about that because that wasn't the setup I was looking for. In all seriousness. All right, let's start the lesson again.
Rewind.
We're about 5 minutes away from 1, so might as well just start here.
Yeah, let's do it.
Let me load up my notes, and where did they go? Okay, they've disappeared.
Also, was that an intentional punch when you're like, oh, please just punch that I didn't punch?
I didn't mean to as an intentional pun, but I just because I like your saying about.
Thank you, I appreciate that. I just heard the double punch, and I was like, why not?
All right.
There we go.
Let's start. Moving averages. We're talking about entries and exits today, guys, using different indicators. The first one, we're talking about moving averages. First thing before I'm going to preface everything I'm about to say, moving averages are to be used more during trending markets and less during consolidative markets. They tend to give a lot of false signals, buy and sell signals during consolidative markets. So you need to be aware about the context in which you're trading, okay? And the way to do that is to, number one, do a chart analysis on the futures, a chart analysis on the actual instrument that you're looking for. Look for a trend, whether up or down, and also look for sideways consolidation. Sideways consolidation can just mean that we're stuck within a certain range. For example, say a $40 range, 120 to the low side, 160 to the high side, and we've been doing that for like, let's say a year, okay? So you need to be aware about the context in which you're trading before you decide about which indicators to use. But The most rudimentary way is as follows. When the stock price rises above the moving average, it indicates an entry point, and when it falls below the moving average line, it indicates an exit point for traders. Very simple way of doing it, but I gotta tell you, probably the least effective in consolidative markets, maybe more effective during trending markets. You have to make sure that you're back testing this stuff, that you're familiar with the time period moving indicator, moving average, pardon me. Are you using the 50, are you using the 200, or some other combination? Like some people use the 100 as well, okay? So that is the first one. And just you know, kind of give an example, let's bring in this over here. Here is ELF. ELF looks fantastic. Clearly, we are trending, okay? This is an obvious trend. It's an up and to the right chart from November 2022 on. You can see the red over here, which is the 50 period. Every touch at the dang 50 period was bought up. So in this particular case, it would have been a hell of a signal to buy off the 50 period here because the market was trending. It was not consolidative, okay? So great example there, and that wasn't one that I planned. So
yeah, it worked out really well.
All right. So just to reiterate, guys, when the stock price rises above the moving average, it indicates an entry point. When it falls below the moving average, it indicates an exit point. And it can also be, like it is in this case, when you're trending and you're extended above the moving average, when you come back into it and hold it, it can be an entry point as well. So you don't have to wait till the actual moving average is breached. Oh, you can actually wait if you're above the moving average to come down into the moving average before buying. And that's what you're seeing here on ELF. All these moves into the 50 period were absolutely bought up. Okay? So I just want to make that one clear. All right, so next one. Moving average convergence divergence. Let's pull that up. And let's pull it up on a different one over here so that we can come back to it. Just allow me a minute to load up the studies, because the studies, well, there's a lot of them, Adara. And I don't have it on this one, so I got to go to the other one. Oh, my goodness. So many charts, so many studies. I know. Yeah. Sorry, Chile Nightmare. I apologize. Where is moving average convergence divergence? It's disappeared. Okay, so we're going to have to type it in again. MCAD, MACD. There we go.
Thank you. Jump.
All right. Apply OK. Let's take off RSI over here because it is kind of getting in the way. So, and I have to change these lines to make them thicker. Sorry, guys. Allow me a minute here to do this. Oh, boy. I hate doing this live. But for whatever reason, it didn't save. No, I'm done.
Okay. Sorry. I wasn't sure.
All right, guys. Moving average convergence divergence. MACD is a versatile indicator used to understand the momentum and trend direction of a stock's price. It consists of two lines. The MACD line, which is consisted of two lines. The MACD line on my chart here is going to be the blue line, the blue dotted line, and then the signal line is going to be the purple line. The MACD line is basically composed of the difference between the 12-day and the 26-day exponential moving average, and the signal line is simple. It is the 9-day exponential moving average of the MACD, okay? When the MACD line rises above the signal line, it creates a bullish crossover. This indicates to traders a buying opportunity known as an entry point. Whereas, conversely, the MACD line falls below the signal line, it creates a bearish crossover. This indicates to traders that a selling opportunity known as an exit point. That is the very basic way of using moving average convergence, divergence, entry and exit. I would suggest to you the more nuanced way is to look for the divergence between price action, the crests and the troughs in the price action, and the crests and the troughs in the MACD. Okay, so you're looking for areas where a new high was made on the price, but not necessarily a new high or a new crest on the MACD. And you're looking for divergence there. Typically, that will indicate to you that the price will start trending down. And case in point, right here, baby. Let's go. This is ELF. ELF seems to be a great one for
all the examples.
Yeah, so here we go. So this trough, this crest, pardon me, over here comes into that 139, 140 area, okay? And on the MACD line, look what we did. We created a peak over here at this 6.3. However, next time around in September, we got to that same 139, 140-ish level. But look at this. The MACD line made a lower high. There was price action MACD divergence. And then look what happened after that. A big boy khwadunk. We dipped from 140 all the way down into that $90 area. So the MACD price divergence, absolutely bang on in this occasion. That's the way I would use it. That's the way that Michael Noss has showed me to use, how to use these indicators. Again, I'm looking at it on the daily chart. I'm not talking about intraday. Okay? But the most rudimentary way is to wait for the crossover signal where the signal line crosses over, where the MACD line crosses over the signal line. That's a bullish indicator. When the MACD line falls below the signal line, that's a bearish indicator. Okay? That's that. Let's move on to the next one, which is relative strength index. Let me load that bad boy up because I just took it off. RSI, let's take off MACD, apply OK. There we go. Quick. RSI, relative strength index. RSI is another technical indicator that measures the speed and price change movements that indicates overbought or oversold conditions in the market. RSI is measured on a scale of 0 to 100, and that's what you see delineated over here. So you have the 0 line, which is the very bottom, and the 100, which is the top. But for for whatever reason, you only see 20, 40, 60, 80 on my chart, but you can guesstimate where the 100 is, okay? When the RSI goes less than 30, it is considered an oversold stock. This means the price of the stock has declined rapidly, and there could be a possibility of a reversal going upward, pardon me. On the flip side, when the RSI goes above 70, the stock is considered overbought. This indicates that the asset price has risen sharply and suggests a possible reversal or downtrend movement. To identify entry points, traders focus on less than 30 indicators, which is a potential buy signal. And for exit points, they focus on above 70 on the indicator, which indicates selling point. So that is considering you're going long. So to surmise, the basic rudimentary way of using RSI, which is not the one that I advocate, is to buy when it's below 30 and to sell when it's above 70. I don't agree with that necessarily. Okay? Now, let's look at the divergence aspect of it. Let's do it again. So we're still on ELF, okay? So we know that 139.20, that was the high in August 1st of this year. Where did the RSI top off at? Well, it topped off at that 79.76. Let's say 80, okay? It topped off at 80. We got to the same price level that we did on August 1st, again, at the end of August, early September. Did the RSI make a lower high? Yes, it did. Look at this. So it peaked out here. So we said 80 was the first one. And then this time it's 67. So you have a lower high on the RSI. This is a leading indicator because look what happened to the price after that. It absolutely tanked. You went from 140 or 139 and change all the way down into that 90 area. So this is a clear case of RSI price action divergence. Cool?
Yeah,
Any
yeah.
questions?
Sorry, I was just going to ask. The one thing I'm curious about with this ELF example is because and I'm going to try to find a way to word this because sometimes I struggle with this. So my understanding was if it's above 70, that it's a bit more like maybe to be overbought and we might go to the downside, right? So so we're more likely to be overbought if we're over 70, right?
Yes.
So I guess that's where my question is. So if we're, I don't know if this is always the case, but yeah, it looks like we were like over 80. It was, we were kind of still moving up, and then it was when we got to 70, then the move kind of moved down.
Yeah.
Is that common, or is it really just like
and that's what it's telling you to do. That's
Okay,
literally what it's telling you to do.
That makes sense. Yeah, thank you. I appreciate that.
Shout out to the Chilean. Yeah, it's telling you that you are in an oversold state above a reading of 70.
Okay.
Sorry, an overbought state.
Yeah.
Pardon me.
Okay.
Above a reading of 70 and an oversold state below a reading of 30.
Okay.
That is the AB DEC way of doing it.
Okay, so okay, that makes sense, because when you put it like that, I understand. So that's why we got lower to that 70, because we were buying less, because we were overbought as indicated when we hit. Okay.
The way that I'd like to use it, and the way that the Michael Nosh showed me how to use it, is to look for divergence between peaks on the price and peaks on the RSI. Okay. When the RSI starts making lower peaks than the price, they are diverging.
Okay.
And typically what you will have is a move down if we're talking about peaks on the 70s.
Okay.
See what I'm saying?
That makes sense too.
All right.
And I also, sorry, one more question. So I'm guessing that RSI movements, if correlated with volume, would be more significant. So if it says we're oversold and we have really strong volume, okay.
Always, volume always important. And by the way, we are in a full state of tanking right now on the market, guys. People were wondering, do we have a bond auction? Guys, we don't.
Oh.
We don't. We don't have anything. We had a measly 4-week and a measly 8-week bill auction. Those both came in at 11:30. They were both met with more demand than the previous. So if you're wondering, the 4-week bill auction, the previous print on the yield was 5.285. This time around, it was 5.270. The lower the yield, the more the demand relative to the previous auction. The 8-week also came in at the previous print on the 8-week was 5.275. This week it was met with the exact same demand, 5.275. Those all came in at 11:30. They didn't come in at 1 o'clock. Typically, I know you guys expect auctions at 1 o'clock. We don't have one today. Trust me, we don't. I'm looking here on my economic calendar, and we don't have one. So, but the market is absolutely tanking. We're at a very important level. You know what? I love my 100-point levels. We are at 16.7. We're holding 16.7 for now. Do we hold 16.7? We're going to have to watch to see that dance with no pants at that 100-point level. Yeah. We'll see what we get. But yeah, thank you guys for pointing it out, because I was focused on reading and explaining, and I didn't see the futures.
So there is a super chat too. Willis Addison, $2 super chat. Thank you so much. Must have been a bond option that caused huge dump, but it was not.
It wasn't. But thank you for pointing that out.
Yeah, thank you for the super chat, and I love the all caps. Always such a fun time.
All right, I gotta shout out my man there, Big Kyle Burdett. We miss you, Kyle. I haven't seen you in the chat in the last couple of days. I gotta have a dump it. One hell of a short off the top retest. Shout out to you. I know you are more bearish inclined. My man Kyle likes to trade the ES. And
I know he's always in with the ES there. Yeah.
Shout out to Big Kyle Burdett. All right. Love that. I didn't expect that from you.
I didn't expect it from me either.
Yeah. All right. Moving on to the next one, stochastics, one that I am not that familiar with. Full disclosure, one that I don't typically use in my everyday. You know what? Let's pull up that bad boy. Where the hell is the stochastics? Why do I have to keep pulling everything up again and again? All right, let's pull it up here. Stochastic oscillator, Adara, that we're good to go. Apply. We're going to take off the RSI so we can make some room for the stochastics. There we go. All right, so here are the stochastics, and they are an ELF. So the same thing happens with the stochastics. A stochastic oscillator compares a stock's closing price to its price range over a 14-day period. It provides insight into the potential overbought and oversold conditions, much in the same way that RSI does, just from a different perspective. The stochastic oscillator is measured on a scale of 0 to 100. Like with RSI, you'll see on my chart, we have 20, 40, 60, and 80, but you can obviously assume that these extreme levels here that are at the top are the 100s, okay? When it goes above 80, it is considered in an overbought situation, whereas if it goes below 20, it is considered in an oversold situation. To identify entry points, traders focus on oversold where the stochastic oscillator crosses above 20, and for the exit point when the oscillator rises above 80. Again, I would suggest to you to use the more divergence method. On this particular case on ELF, it's been fantastic. On the stochastics, hard to show you because of the extremes. It's always reaching 100 every time. Like it's like obsessed with 100. I don't want to use stochastics. I never used them in my past, but I just want to share with you what the book says. The Chilean Nightmare doesn't like it. The stochastics there. But you hate the fail. What am I supposed to do? Right? All right.
It has to be addressed.
Yeah, I know. Shout out to Fabian. All right. Last but certainly not least, guys, are Bollinger Bands. And this one a little bit more simple of a read here. Bollinger Bands. The ups and downs of the price in trades are determined by Bollinger Bands, okay? Bollinger Bands consists of 3 lines. As you can see here, where the hell is the middle line, bruh? Hold on, I gotta turn on this middle line. There we go, show EMA. Yes, it's a 20 EMA, right? Yes, no, this is not the one. Okay, I have to turn this off. Yeah, trust the teal. Okay.
You're getting like bullied over here with the
I know, it's all good. I gotta let it go. Hide, how do I hide this stupid thing? There we go, hide. Okay, I don't know why it's not showing. Give me a second here to fix this. Bollinger Bands, moving average. Okay. How come it's not showing it? That's weird.
Let me
just do it again here. Bollinger, and then apply. Where is the skin color of that?
Cricket.
I don't know, guys. I don't know where it's going. There. Oh, here it is. I think this is hiding from me here. The Katina Man is now almost $2 in the money on WFC. Yeah, I'll send it to you for a second because I have to fix this, okay?
Let's look at WFC. What a fine chart, WFC. That's what I'll say. But yeah, this is a really good look. Up about 5.6%. Yeah, this is, you got in at like that 48, 80-ish area, right? Yeah, this is gorgeous. This is beautiful. This is like an upward, we're talking about chart pattern week. We had that upward channel here. This is, a fabulous look. I want to look at the other banks as well. Morgan Stanley. Hello. Yeah, Morgan Stanley's a bit of a bumpier ride. We had like a much straighter channel there on Wells Fargo, but this one I like. So we did kind of have sort of a bull pennant situation. Then we did move to the upside. We got a little bit curvier, kind of like a snake curling up here, up about 6.7%. Goldman Sachs we looked at earlier for, I believe, Justin Richardson for a super chat. Goldman Sachs, this one did not have quite the breakout that would be projected by the flag poll. I think it got about half the movement it could have gotten. But yeah, not a bad look at all here, still up about 5.68%. This one looks like it's petering off a little bit more than, say, Wells Fargo, which I would say is still really strong Wells Fargo. Morgan Stanley also looks like it's got a little bit more gas left in the tank as well for that trade. Also, I'm looking at Eli Lilly, because I'm not trying to be too hasty getting in this trade, but lower lows galore here. This has not been a bad range move kind of all day. I like, I could have gotten out more, obviously, but like I said, I'm trying to get more, be a little bit scalpier, still in the sim, still learning. I feel very grateful to have this opportunity. So just trying to wait and be patient here. Also, some people were mentioning Rivian earlier in the chat, so let's look at Rivian. There was news on Rivian. It's collaborating with, I want to say, AT&T. Let me make sure I have my story straight. AT&T and Rivian teaming up to reduce CO2 emissions and enable smart connected vehicles. Yeah, up almost 12% right now. Let's see if we can break another higher high here at this, break above this 2210, 2220 area. This is a really interesting look. And this is a classic example, I think, of like this double bottom. We did have, a double bottom here at this 2080 area, almost exact. And then we had that W shape, and then we had this beautiful move to the upside. Really strong on the day, really interesting catalyst. It looks like a beautiful day for Rivian. I want to look at the daily chart in Rivian as well, because this one's had, I would say, highs and lows. We're kind of catapulting up to a level we haven't really interacted with since about early October. That'd be like October 4th, October 5th. Yeah, this is definitely of significance. I would say, we're kind of within some areas that we're kind of chopping, turning around. It's kind of hard to find on this chart a next area of resistance, because we're kind of at the top wick of this candle to the downside on October 5th, which is when Rivian really had a look to the downside. And let me check what happened on October 5th. Was that the day of, because there was the day with the buyback. Was that October? Yes, it was. It was the it was great convertible senior notes. That's what it was. So on October 5th, we did have the 1.5 billion proposed convertible notes, and you can really see that on this chart here. So yeah, that was kind of the last level we're interacting with. So this 2217 might be an area of resistance then. That's kind of what I can tell. Also, kind of an area where we closed here. So just food for thought, looking at some looks on Rivian. Stop console wars, thanking me for my wording on Rivian. I'm just looking at Benzinga, but I thank you. But yeah, it's just the Benzinga headline on that. Yeah, Rivian and AT&T collaboration for some trucks there. Interesting look, and I would keep an eye on that high of day here around that 22.18. Yeah.
Yeah, I don't know what the hell's going on with these Bollinger Bands, but we got the upper band. I can't seem to get the middle EMA or the middle line where the Bollinger Bands are based off standard deviations. I don't know what the hell's going on. Mine. Oh, yeah. I can't seem to get it. But in any event, I think it's suffice to use the upper and lower bands. Let's go. Let's talk a little bit Bollinger Bands. All right, Bollinger Bands consist of 3 lines. You can only see 2 on my chart, sadly. One is for the upper level. The second is for the lower level. And the third is for the moving average. When the price moves closer to the upper level, we're looking at ELF again, guys. Maybe I shouldn't put it in the ticker so we can keep talking about the same thing. ELF, there we go. When the price moves closer to the upper level, it is considered as the market may be overbought, considered that the market may be overbought. And on the other hand, if the price is closer to the lower level, it indicates that the market may be oversold. Here you can find entry points when the price moves to the upper band. It then generates a bullish entry signal and a good possible opportunity to buy. So, sorry, the lower band, not the upper band. Okay, so when we get into the lower area, it looks like, you know, you could be buying off these levels. Again, I don't want to make it sound so simple because it's not supposed to be used in trending markets. What ends up happening is in trending markets, it just hugs the upper band and it doesn't give you a really good or buy-sell signal. In trending markets, stick more to moving averages. This is to be used during more consolidative times. Again, you need to be alive to the context in which you're trading. You have to know, is this particular instrument, is it in a consolidative range? Can be any amount depending on the price. It can be a $40 range, it doesn't matter. Is it stuck within a range where it touches the top, touches the bottom, somewhere in between, not able to break through the levels? Or is it trending? Is it moving up or moving down? Doesn't matter what direction the trend in as long as it's trending. If it is trending, it will likely hug the upper band in the case of a bullish trend, and it will hug the lower band in the case of a bearish trend. Where it should be used ideally is in consolidative markets. And what you're looking for is 2 things. One, you're looking for the upper band to get touched, okay? And that would be an indication of a nice short entry. And what you're looking for essentially as well is the expansion of the distance between these 2 bands. When they are expanded to an area that is above average for this particular name, you have to know that the price is getting a little extended and that likely it will revert at least back to the mean, if not to the lower band, okay? In this particular case, when we look at ELF's trend, it basically hugged the entire, it hugged the top band for the majority of the time. And you could tell that we were trending because the distance between the upper and the lower band, for the most part, was really tight. It's only when we got into this consolidative area that you can see it actually becomes usable, where the distance between the upper and the lower band actually expands, and then you get actual rejections off the level. So look at this. When we started consolidating sideways and we created that double top at 139, that touch at the lower band, or sorry, the upper band, basically sent it all the way tanking into the $100, about $40 south of the top, touching the lower band, holding it really nicely here, and then moving sideways a little bit. Okay? So this is how you basically, conversely, you can identify the exit point if the price breaks below the lower band. That's if you're long, obviously. It generates a bearish entry signal, which is a possible time to take profits or consider long positions. So sad I couldn't show you guys the middle line here. I think it's the 20 EMA that's between these 2, and then basically this is 1 standard deviation above and 1 standard deviation below. So simple ways to use entries and exits using these indicators, but again, it's a very rudimentary way, and you need to be quite nuanced in real life when you try to use it, and make sure you are backtesting it before actually using it in real life with real money. Shout out to Zenod 1066. $5 super chat, my friend Sharif Adera. You guys should do a segment on super trend. I also like the super trend moving average. I don't even know what that is. Full disclosure. Adera's going to look it up, and maybe I will too. But thank you for always pointing that out. I know that there is an umpteen amount of indicators. What does it say,
There's a whole Investopedia article on this, so it's a technical analysis. Okay. Developed by Olivier Saban, the indicator is useful for capturing the direction of an asset's momentum and is widely employed when looking at stocks, currencies, and commodities. Plots a line on the price chart, which acts as a dynamic level of support or resistance, helping traders and investors. Okay, so it just seems like a different kind of indicator. I want to look more into this. This is very interesting.
Yeah, very interesting.
Thank you for bringing that to our attention.
Absolutely. Stop Console Wars says, speaking of Bollinger Bands, Mullen has Bollinger Trucks. Any relation to Bollinger Bands and Bollinger Trucks? LOL Joe. Guess who just appeared on the scene over here? We have Handy Randy, who's now made an appearance. He's sitting, yeah, because he is. You should have seen when he was making the green screen over there. He was killing it. We call you Handy Randy. Yeah, that's a nickname for you around here. Handy Randy has arrived. Randy, go. He doesn't have the mic on, but he said XOM CVX breakout, baby. He's been watching oil, and XOM up 3%, CVX up 3 1/5. So shout out to Randy there. Randy, do you have that mic? Can we chat with you a little bit about Mullen? You don't know anything about Mullen? All right, we're gonna have to show him pictures.
Nice car.
Say that again. MSFT for the Katina Man, $5 in the money, baby. So anybody following along with the Katina Man and his short on Microsoft, he is still holding a piece there and printing on that Mullen Automotive, right? There we go. Okay, let's get some images, baby. All right. No, it's not a bad look at all, I gotta tell you. But Gary, you're muted? Okay. All right, Randy, I want you.
Yeah, sorry.
What do you think about these bad boys over here? Let's click accept. That's a good looker right there, eh? Chile Nightmare, come back to the screen. How come it keeps moving so quickly on me? Here it comes, Randy. Look at that bad boy. That's not bad look. It looks like the R8, doesn't it? And this looks like the Mach-E, I gotta tell you the truth. How can we view their models? Oh, there we go.
So many cool designs coming out from NIO and XPeng and all these guys. Like, it's so futuristic, but they've really done well with their execution. So yeah, I mean.
What do you think about this one, Handy Randy?
Wow, what's that?
That's the Mullen GT Grand Touring.
Yeah.
Mullen.
Like I said, I don't know much about them.
Doesn't that look like the R8 to you right there?
A little bit, yeah.
A little bit, right?
Got a little bit of Acura NSX on the front end.
Yes, a little. I agree.
Sounds like Gran Torino. A little bit.
Gran Turismo.
All right, let's look at the other one here. Hold on. That's the GT. Let's look. This is what they were talking about in the chat, the Bollinger Band. Yeah, I don't care about these trucks, man. Come on.
You know what you do, though?
The Mullen 5. Let's look at this, Randy. Hold up. Let's see. Let this. I don't know, man. They're not exciting, Katina, man. They're like transport trucks, not even like SUVs or anything.
They brought your dinner this morning or last night, and your
here we go
this morning.
So this is what they call the Mullen. What is this called? What is it called? No.
Hot fire.
55,000. That's not a bad price point right there, though. You got to say 55K.
You know what? They have to be, Sharif. They got to be in this price point because prices are coming down.
Yes.
Supply chains getting streamlined. You know, they've got to compete. And,
yeah, no, I agree.
You know, if any of this stuff lands in volume in North America, there's going to be a fairly good upset. Ford's having so many difficulties with how they price the F-150.
Right.
Production's been halved because they can't sell them, they can't move them.
Right.
When you overprice a product to a very reluctant and sort of hesitant audience, an audience that's stuck in a recession, stuck with inflationary pricing, it's difficult to pull the trigger. Price is a big thing,
Right.
Great looks, great reliability, a lot of brand value, but if the price isn't there, maybe not.
Huh. I had a question to ask you, but it slipped my mind a little bit there. But okay.
Need a car.
Oh, I want to ask you, Randy, how do you feel about these new non-circular steering wheels that we've been seeing lately? Like the yoke, and there's like all these derivatives of the yoke where they're like rectangular, not circular.
I've driven one yoke. I've driven for years a car that has the flat bottom wheel.
Okay.
It's, you know, it's been around for a while. The square, no, it doesn't jive. It's not so natural, but you know, is it a gimmick? Is it a selling feature? Is it more ergonomic? I don't know. I don't see it, but who knows? You know, maybe they'll be more popular down the road.
Right.
Maybe they'll be more commonplace. You'll be able to check off that option box on your order sheet. I don't know. I still like my.
I like it.
I like the flat bottom.
Yeah.
Because you got a little more room for your legs in a tight compartment. But the square, the yoke, I drove it once and it was uncomfortable. It was.
So, and like when you're doing a tighter turn, do you find like you can't do this?
That's maybe I'm lazy, but I like the palming action, and you just, I mean, you're trying to do the overarm like we were taught in driving school. It doesn't work that way.
No. Yeah, well, there you go.
A bit odd.
Yeah, there's always going to be like the learning curve, I guess, when we go through this new change. Any update on Faraday futures, Randy? Anything going on there? FFIE?
I do not.
Do not. No. Okay. All right. No worries. Any updates on cars in general? Because we have you. We want to talk little cars.
I mean, the Cybertruck news in the last few weeks has been dominating most of the media articles out there. I'm expecting to see some good Rivian numbers in January, which is our year end of this year. I'm looking at hopefully exciting Rivian numbers. Yes, again, the Cybertruck's been dominating the news, but Rivian sales numbers specifically, I'm looking for some positivity.
Right. And they've been doing well with their sales numbers as of late. They keep beating Rivian, that is.
Exactly. So November was a good month globally for EV sales.
Yes.
This is for all brands. It was just reported on a bunch of websites.
Hold on, Chilean Nightmare. What do you think about this now? Okay, the Chilean Nightmare has authorized it now. Okay, so we've gotten the go-ahead. Katina Man, what are your thoughts on black? I like the matte black. Katina Man likes the matte black as well, baby.
It's the Darth Vader truck.
It's the Chilean Nightmare says it has to be matte and not glossy. He will not accept any gloss on his. I like those
wheels. He's not going to get in a gloss.
Katina Man, do you know that these are clip-ons? These are mud flaps, so you can actually take these off, and then there's actual rim below them. Yeah.
Interesting.
Okay, so ugly, says Trish. Trish, I mean, look, you're not alone.
To each
Trish.
their own.
People hate this car. Some people love it. Randy, if you had to rate the Cybertruck out of 10, what do you give it?
No, I can't give it a 10.
You're going to give it a 10?
Couple reasons why.
Go.
There's a bunch of unknowns here, not just in terms of the truck's design, but it's overall reliability. This was a challenge for Elon to get this out the door. First truck on the market that's fully stainless steel. We're going to have some questions 5 years from now. How is it going to hold up?
Absolutely.
Durability, reliability. I mean, I'll give. You know what? I'll go to a very long limb here and hand out some credit to Ford.
Okay.
They're the #1 selling single model platform on the planet, the F-150. There's a lot of brand value behind that singular model because of reliability, because of durability. So when you put a truck on the market, you've got to build that in.
Right.
So those knowns are going to attract contractors and people, not just people who want to play in the desert, but people who want to haul, tow, move stuff around.
You're going to beat this thing up.
It's a truck for more reasons than just how it looks.
Right.
So you have to build that in, and it takes time to evaluate that and to give credit for what they've done. We'll see. We're gonna wait.
Have you heard anything specific with respect to drawbacks on this particular truck? Or are we still waiting for the information to trickle out?
Lots of stuff to come. There's gonna be lots of software updates, little things that need to fix. Crash test safety has been perfect. There's been lots of, not perfect, but up there.
Right.
There's been lots of questions out there from the journalists that have reviewed them in the last few weeks. Oh. And I'm sure that the Tesla media team will be answering those once Elon sorts through the noise. Again, questions, durability, long-term testing by the likes of the magazines, Car and Driver, and the usuals.
Right.
The long-term is going to really paint the picture here. Again, these are durable work vehicles.
I have a question for you. We know one of the major drawbacks for the Lightning has been its range when it's loaded, right?
Yep, and when towing.
And when towing, likewise, of course. Are we going to have that kind of issue here? Did you hear anything about? Is that a general issue with pickups?
EV
pickups?
I haven't seen a lot of towing tests with the Cybertruck yet. I've seen a lot of 0 to 60 tests and quarter-mile tests, and they're kind of frivolous. At the end of the day, if you're towing a trailer full of whatever, or you're hauling something in the bed, or you're putting this thing to work, that's where the long-term testing I think is going to really
you need to see real-life tests.
Prove its merit. These trucks are ultimately for work. And if you're a contractor or you're a fleet owner, you're on a ranch, you're hauling materials, you want to be able to put this thing to work when you're not just staring at it because it looks so cool. So
yeah, I agree.
Ultimately it's a toy for some people, but for a lot of people willing or considering to be willing to make the switch, can this thing prove its merit? We'll see.
I guess, yeah.
We'll see. I'm looking forward to long-term testing.
Yeah, I have to agree 100% with that. Yeah, I mean, with Tesla, look, so far, everything they put out there is held up. So we'll have to see if this one can hold up as well. Did you see that one where it towed that 30,000 pounds more than any other truck?
Yes.
And what was it? Did it compare the 350? It towed more than the 350 for longer?
And so
you see what I'm saying?
The fact that it can tow so much, but it's how far it can tow it.
Right.
And how many times can it do that?
Right.
Most people aren't towing 15 tons of cargo.
Okay.
The average consumer, the Ford F550, I think is the biggest cabin chassis model they make.
Yes.
But the average contractor is not towing that much. You're talking a class 5 area truck. Yeah. A lot of weight. But the fact that it can do it is great. Again, battery power, range anxiety will factor into, how usable this platform becomes.
Yeah.
Up until now, the Model X, I think, was the highest towing capacity platform they had. This is far and away.
Oh yeah,
that.
Come on, this is
Let's wait for the usability, durability, reliability tests, and how workable these vehicles actually are. That'll put a lot of brand value behind the model.
Appreciate that, Randy. Always as insightful as can be, baby.
Brian.
Yeah, well, it is.
I enjoyed that. Yeah, that was a good look on EVs.
Well, he talked me out of he didn't talk me out of it, but he definitely put some thoughts in my mind out of the slingshot that was, I didn't mention to you guys. I've been talking about the slingshot and me bamboozling a new vehicle. So the dude came over to my place yesterday with the slingshot, and I got to drive it in the -2 degree weather. I think it was -3 yesterday around my condo. It's a hell of a vehicle, but Handy Randy letting me know, man. First of all, before 2021, there were GM engines, and they're not so good. And then after 2021, the slingshot got an upgrade, and they're using Polaris engines, which are apparently worse. So some reliability issues there. Randy suggesting to stick with the Can-Am Striker, which was my original go-to move until I found out about the Polaris slingshot. They're both three-wheeled, like they're tricycles kind of almost, but with 2 front wheels and 1 back wheel. That's what I'm talking about. But I love those bad boys, and it was a lot of fun driving it around the neighborhood there. And it's a 2-liter 4-cylinder. It'll make like no gas. So that's why I was pumped about that. G. Franks. All right, let's get back to work, baby. G. Franks. Hey, Sharif, why is the NQ dumping? And Powell was nice yesterday. Good question. Probably a little bit of profit taking, my friend. There's nothing really that I'm seeing here from a macro sense that is justifying the big move down, but we had a huge move up yesterday, and it's healthy to get a little bit of a pullback at Adara. So we were theorizing possibly could have been some auctions. We then looked, and we didn't find any auctions to justify the move down the market. We'll have to wait and see. But I'm watching this closely. We are at a critical level. You know how much I like these 100-point levels, no doubt about it.
It makes sense because 100-point levels can be key.
They can be, and they've proven their worth or their importance, I guess, to say. In the past, we are at 16.7. We're below 16.7 now, so we're doing the wick dance, but from the south side, not the north side, meaning that we can't seem to reclaim 16.7. And why is that important? Because if you keep wicking up into a level only to have a closing print south of that, that means sellers are typically overwhelming buyers at that particular level, and this might be a short. We've been rejecting off VWAP umpteen times. This is where I was interested in getting long, where we reclaimed 16.8, and we were about to break through VWAP, but look at that. Right when we got into VWAP on the future, we tanked, and this was the short that I missed, but I didn't really miss it because I wasn't planning for this trade. And now we're right back into 16.7, so let's watch what we do at this 100-point level, whether we reclaim it and start pumping back up, or it's going to be another leg down where we reject 16.7 and come possibly back into 16.6, a level we dealt with yesterday. So we'll have to wait and see, but it's been a short kind of day on the Mag 7 as all of them now, for the exception of Tesla, are red. Tesla is an absolute beast. And here's the look on TSLA in case you're just joining us. It has been rocketing up for 2 days in a row now. Yesterday, we were talking about a price level as low as 228 1/3. And today, we got up to 253, almost 254. That is a whole lot of range for 2 days, guys. It's been a good look on Tesla, but a bad day for the Mag 7 as a whole.
Yeah, Tesla woke up in beast mode. And so did Apple a little bit, because Apple early on, I think, was trying to make gains because of its beautiful new all-time high. It closed at its highest level ever yesterday, made an all-time high today. Apple was living its best life. It didn't want to be the dead one. Let's see what Apple's doing now, like just the chart, and then I'll get into my NVIDIA trades. Yeah, Apple just kind of like, taking the steps to the downside. Nothing too major here. We had sort of a double top and then swooped back down off that 198.5. But also NVIDIA has kind of been an interesting look. So I got in on this long at 475, even though we were down on the day, because like I said, I'm trying to get a little bit back into the scalping. Very happy that I am able to, do this in the sim mode and kind of learn. And I've decided to employ a method I'm gonna call scalpulations. Scalping and making calculations. So I got in at this 475 and I was like, let's see what we do, right? I noticed some resistance at 476, I get out. Then I'm noticing, you know what? 476 is kind of holding up. Let's dip another toe into the water. So I get at 476, get her at 476.50. This was maybe, I was very lucky this ran it very quickly. Just kind of getting in, getting out, scalpulations. We'll see how we were talking about as a new trader.
Love it.
Especially because I'm lucky enough to be able to test things out in the sim. I think as a new trader, kind of learning what works for you is, I think, important. And what I've learned is working for me is dollar or $half levels. And as short as possible while seeing what we're doing with the tape. So a combination of chart and tape and scalpulating. Also, I think it's interesting too, because with regards to the future and those $100 levels, we were talking yesterday, I was saying yesterday, it seems to be kind of a correlation with, the small caps and these $1 levels and the future and the $100 levels, right?
The point levels, yeah.
So that's what I meant, yeah, 100 point.
Yeah. Absolutely.
So it's, and also because I want to bring up CCCC, because yesterday you were saying to me, you're like, oh my gosh, look at quadruple C, because I'm gonna go to yesterday's chart. It's not kind of fell off today. Definitely fell off today. But I want to look at here we go, because you were saying look
yesterday
at
that 5 and 6 level were important.
That's why I wanted to bring it up.
Yes, I remember that.
What day am
Today's the 14th.
Yeah, today's the 13th. Okay, perfect.
14th. Yesterday was the 14th.
Yeah, sorry, that's what I meant. Yeah. I've worded that.
You're good.
But yeah, no, we definitely had kind of this, is this 13th? Oh, yeah, okay. But yeah, so we definitely had kind of an interesting chart here and moving to the upside. I thought we hit a 5 or 6, but I guess I'm not seeing that when I actually look at it. Let's look at the daily. But yeah, no, I know there was you were like, oh my gosh, we made it to 6, and then we kind of went right back down from there. Okay, there we go. You can see it more on the daily. But yeah, here we are here in the daily yesterday. You can see we hit that 6, had that wick off the 6, and then went to the downside. And we saw that fight with 5 yesterday.
Absolutely.
You were showing us that fight with 5 live on the midday. Sorry for that confusion there, trying to get my chart together. But yeah, there you go.
Joe Finero, Dara, Sharif, can you guys talk about tomorrow's triple witching and how that does affect the market? My guess is the market's going down due to triple witching. We will have to wait and see, but we also know that, I'm not saying triple witching is not important, it is, but we also have a rebalancing day tomorrow on the S&P. Things coming in, things going out, the most important of which is Uber. That will be a big trade. 200 million shares expected to be added tomorrow on UBER. And if you do the notional value about how much that is, I think Brendo and I were doing it, it's like 2 billion, 12 billion or 15 billion, something like that based on the current market price. So lots of money will exchange hands tomorrow. That is a trade. It's a dangerous trade to try to get in on Uber during very volatile times. So I wouldn't suggest it to anybody who's starting out, but it is a trade here that is done on the floor. These additions and deletions with respect to the indexes, right? They can be quite volatile. I would suggest you look at the Tesla trade when it was added to the S&P 500 and what it did. There was madness volatility. Katina, man, it sold off all day, right? Tesla, when it got added, and then it spiked up into the close. Yes, the Katina man confirming that when Tesla was added, I believe was added back in 2021. The Katina man was down about $60 a share, and then it ended up skyrocketing when the imbalances came out. Recall that. So the first imbalances, don't forget, it's that like 50 to 55 period, 350 to 355. You have a lot of movement with the market on close orders. What is happening essentially here is all these ETFs who, follow the S&P and follow other important indexes as well are going to be adding Uber to their portfolio. And so typically what they do is they want to get the best price possible. Some of them will, try to market on open orders, market on close orders. Sometimes the algos obviously will be trading intraday. So a lot of volatility to be expected tomorrow with Uber. If you're going to take the Uber trade tomorrow, be very careful. Because of the volatility. Again, go back and look at see what Tesla did when it was added to the S&P 500. I'm sure that's what the meeting is about today with the traders on the floor as that they're in the meeting right now. They'll probably be getting out shortly.
Yeah.
Wasn't it MongoDB changing index as well? Yeah, I think there's 4 deletions or 5 deletions in additions tomorrow on the S&P 500. It's not just Uber, but I would say that Uber is probably going to be the biggest one just based on the amount of share size that we expect to actually take place tomorrow. So do a straddle, says Peterson. Look, straddle is one way you can kind of trade this kind of thing. I find straddle to be a little bit risky. I used to do straddles for earnings plays, and they can come your way or they can basically blow you out. So I would just say if you're gonna do anything, if you're not experienced, stay away from this trade. Okay, that's what I'm gonna say to you on that. Otherwise, good luck tomorrow, guys. Harry Lou, Sharif, I'm surprised Sean was not stopped out if he was down $60 per share. He's got...
Oh, no, that was just building.
He was building the position there, so he didn't get in the entire position all at one time at $60 a share, Harry. He just wanted to make that. Go. All right, so Randy wants to tell us something about a Mullen competitor. Randy, that's a beauty. What is that,
Oh, my
dude?
gosh.
Can people hear you? Okay, hold on.
I love
Randy's getting ready, baby.
It's a new BYD supercar.
This
thing.
BYD?
This is BYD. Look at this baby.
Dang. See, Brendo, what'd I tell you about BYD, man?
Like this is coming next year.
That's a looker, dude.
It's
it looks like a little bit like the NSX, no?
A little bit.
A little bit?
Good. It's very McLaren-ish on the front end, but I love it. It's just well sculpted and very.
What's the power on that, Randy?
I don't know. They compare a bunch of different figures here, but we're north of 1,000 horsepower.
North of 1,000, yeah. That's what I can expect.
It's pretty sexy looking.
That's a beauty, man.
Anyway, just throwing that in there.
Thanks for that, man. You never know about these supercars. What is it called? The U9? What's the name of it?
It's called the Yang Wang right now.
The Yang Wang. Okay.
Yang Wang.
Yeah. Okay. Brendo hears something else, but that's neither here nor there.
Brendan's killing it.
I love Brendo. Brendo's killing it today. Randy, that's a beautiful look. Anyone who's interested in BYD stock, it trades on the OTC market. Shout out to Jeff Mendel and his crew. The ticker for BYD in North America is 2. BYDDY and BYDDF. They don't do all that much volume. Today, for example, BYDDY did 286,000 shares, while BYDDF has done 93,000. They're not typically trading stocks. These are more investment vehicles if you are interested. But BYD is a serious player in the EV business. It is rivaling Tesla now with respect to how many EV deliveries it is producing there in China. So they are to be taken seriously. And they're also up over 2% on the day each, so not a bad look there.
Yeah, not a bad look at all. Also, Brad Bosiger in the chat, Sharif, current NQ futures contract symbol, pretty please.
Yes, ma'am, absolutely. So that's what we've been looking at all morning.
Yeah.
And I'm assuming you're talking about the NQ?
Yeah, he just wants to know the current contract symbol.
Oh.
So I guess like the H.
Okay, so on our platform here, it's I trade the micro, so it's MNQ. backslash H24. So 24 obviously delineates the year because prior to that it was Z23. So now it is H24. That is the same thing as well for the ES. So if you were to type in MES or ES backslash H24 as well for the S&P futures contract, and that expires March 15th. But like we do with all futures contract, we roll on the Monday before the Friday expiration, which is what we did. So when we started this Monday, we went to the March contract, despite the fact that the December 15th contract continues to trade until tomorrow. But on this floor, we roll. So any other questions with respect to anything, guys? About 13 minutes left on the show. In case you're just joining us, we've been talking about entries and exits using those particular indicators that you see on your screen. We talked about moving averages, how to get in and get out using MAs. We talked about moving average convergence divergence, MACD, how to get in and get out using MACD. We talked about the crossover method. We talked about the divergence method, with divergence with respect to price action. RSI was also on there, relative strength index. We talked about entries and exits with respect to relative strength index, but I would suggest to you that my way is the divergence way. And as I talk about that, the future continues to dump. It is a 16.7 rejection for now as we make a newer low. So lower high, lower low, Chilean nightmare over here on the future as we kind of give up a lot of the move now. We are down 0.6% on the day. We moved back down yesterday. 16.6 was definitely a level, and we may see 16.6 by the time 4 o'clock rolls around. We're not that far away from it right now, about 75 points a day, but we are well off the highs. It should be noted that the high of day today is 16.885. We were talking about a 16.9 touch, and we are now about 200 points lower than where we made high on the day today.
Yeah, it's definitely heading to the downside. I have Tesla up right now, which I'll get to in a minute. But thank you, Willis Addison, for the super chat. $2 super chat.
Yep.
Second super chat of the day, I believe. Warren Buffett invested in BYDD as per Charlie. RIP Charlie. But yeah.
That was his call. It was Charlie's call.
Yeah, well, because I know like Warren Buffett has said that Charlie kind of pushed the
heavyweight, man.
Didn't you used to have one of his quotes on your phone screen?
Yes, I do. Yeah. I want to read it out to you guys because one to live by, actually. Well, I mean, it really depends on what you think and your philosophical inclination. But here's what it says. The first rule of a happy life is low expectations. That's one that you can easily arrange, meaning one rule that you can easily arrange. And if you have unrealistic expectations, you're going to be miserable all your life. And I couldn't agree more with that.
Oh, so do I.
There used to be, do you remember? Okay, you're probably too young for this. There was a show called, what's it called? Mad? It was like Saturday Night Live, but it was on Fox, Mad TV.
Okay, I know a lot of people came up from that.
So
yeah, like I believe both Key and Peele came up from that.
Key and Peele, they did?
The girl who played Joan Calamezzo on Parks and Rec, I believe, also came up from that. If anyone knows Parks and Rec, but yeah, I'm aware of like the people who it created, but I'm not really familiar with the show.
Yeah, so Mad TV, they used to have a segment on Mad TV called Lowered Expectations, and it was like about like a dating service, but like you were lowering your expectations to get with like a man. It was like, and they even had a song. It was like Lowered Expectations. Anyway, you guys know. You can YouTube that. I won't bother you with that. But the future continues to tank, guys. We are now down into the 16.650. We're only 50 measly points from that 16.6 yesterday, and I have no idea what the hell is going on today, guys. To that 16.575. That is the low, but you can say that the consolidation area, especially in the pre, was definitely that 16.6. So we're about to come back all the way down from what we gained yesterday. Look at that monster move up. This spike over here was the algo spike that we got when the Fed kind of released their notes. We all knew that it wasn't going to be a rate hike, but it was the statement, I guess, that was released that really got everything bullish. And the dot plot, which is forecasting 3 possible cuts next year. So that got all released at 2 o'clock. And then you had the market rocket up. And then we continued in the aftermarket yesterday to make that high that I was talking about, 16.885. And it looks like we're going to give that whole thing back because we are on our way down here. 16.637. It continues to tank Adara on the day as 16.635. Wow, this has been a short to remember. What a rejection off VWAP here, man. I feel uber stupid for not having taken this. Kyle Burdett is celebrating like an animal there. Let's go dump it, baby. He says dumps like a truck. Okay. All right, Kyle. I like that. Adair probably really likes that too because it's very punny from the song. We know about that, obviously. That's what's his name? Cisco, yeah. And what's his name though? What was the group's name? Oh, damn. Cisco was a singer, but he was part of a group. There was 2 other dudes. All right, well, the chat is going to fact check us in a second anyway. Yeah, big Drew Hill. Thank you, guys. Yes, Drew Hill. He was part of a group. Thank you. Yes, this is why I'm... the memory's not working that well. Yeah, everybody knows exactly what I'm talking about there. Shout out to you. Jay Lee. Shout out Big J. I have TQQQ puts expiring tomorrow. Go Hadouken. All right, my man. All right. You want that market to go down. He's got TQQQ puts. You're printing. Hopefully we move down then Friday with the triple witching and the rebalancing of the S&P. We get a nice move up. You print, I print. Everybody's happy. Any final thoughts, guys? We've got 7 minutes left before we hand it off to Brendo and the big kahunas there. Well, the big kahuna. Say that again? Big Frank Caberna going to be on 245 with Brendo. Make sure to check that out as he always has very important things to say with respect to the macro situation. I'm sure he'll have a lot to say about what happened yesterday. The new Fed forecast with respect to interest rate, the new dot plot yesterday was released. I'm sure Frank will have a lot of opinions on that, Adair.
Yeah. I have opinions on Tesla. No, I'm joking. My opinion is that I'd like to see what it does at this 247 level because this 247 was very much an area of consolidation here. We really fell off this earlier area that we were consolidating at this 490, not 249.50, 250 kind of area. We did basically the same pattern, but opposite actually. So we had like the green candle going up, then the red one down. Then on the way down, we had red and then green. And then, yeah, like we're really going to test that. I think this 247, 246.50 area could be key given the consolidation earlier. Tesla, a really interesting one to watch all day. Also, NVIDIA, interesting, because it basically, I was doing my scalpulated shorts or longs over here earlier, and now it looks like we might be trying to make a higher low in NVIDIA, so just wanted to shout that one out as well. Cannot believe how quickly the time flew. It is 1:55.
Yes,
it
ma'am.
is a crazy time. Also, with regards to kind of looking at indicators here for exits,
yes,
when I noticed NVIDIA kind of around the EMA, this is when A, we had EMA interaction, right? And then B, we had these failed wicks to the upside. So it's like not always, indicators are going to come into contact. But I mean, if you're looking at the way NVIDIA, if you were still in this long, right, and you were looking at the way NVIDIA was interacting with the EMA, it could be an opportunity to maybe make your exit, you know what I mean, or enter a short. And it was something I was watching because I was considering getting back in at this 477 because I was getting in and out of these longs on these whole dollar levels. But then I saw this failed wick to the upside and the EMA interaction and was like, maybe not. So I think it's an interesting way to look. Also, don't shoot here in the chat. Adair's new name, Scalpulator.
There you go. Okay, that should be your new name.
Not a bad time.
Jay Lee says worth mentioning AMD short would give you a $5 winner from this morning. High 141 and change. Bang. Didn't you have that? The Katina man is still in Microsoft, in the short, on MSFT, and he's $5 in the money, guys. And he's out of, you're out of WFC. He's done with his Wells Fargo short. That's all done. He'll be on in exactly 4 minutes. He'll be telling you all about that. But for those following along, he's at a Wells Fargo. He's still holding Softy. Softy giving up the ghost today. Softy is down the most of the Mag 7. Softy's down 2 2/3%. The Mag 7 names are all below that. Netflix, though, if you want to include Netflix in the old FANG, it's down 3% after having a fantastic day yesterday. It's down big again today. I didn't take any trades today, sadly. I had to concentrate on the lessons, but it was definitely an opportunity to take some shorts on the day. Sadly, I wasn't involved. Maybe we'll have a better day tomorrow with the rebalancing. Any questions that you guys have, guys, throw them in the chat as we wind down the show. 3 minutes left before we send you over to the big kahunas. I'm just going to scroll up to see if there were any other questions. Blackberry asks, Sharif Adira, NQ could be multiple reasons. Tomorrow, witching day and Okay, well, there's some stuff from the Middle East as well and some stuff in Latin America. Yes, absolutely. We are aware of the geopolitical tensions that are happening. I know that there's new geopolitical tensions brewing in Latin America. It's beyond the scope of the show, but if it does become relevant for oil, maybe we will talk about it at some point. Yeah, and that's basically it. Hampton's Trader says book recommendation. I don't know which one are you talking about, Hampton's Trader, in what context? Are you talking about trading books? Yeah. If it is, show the Katina Man received a present today. We're going to thank Pranaya again for sending this to the Katina Man. This is Michael Lewis, Going Infinite, The Rise and Fall of a New Tycoon. It's about SBF, Sam Bankman Fraud. Like that one? I jest, of course, or I just had to say that. Come on.
Pretty great.
This is the guy from BNN. Did you see the guy on BNN over here? He opined on the book. Yeah, that's I don't know how to say his name. Yeah, he good book. Katina Men will read this, and then we'll all hear about it. Maybe it'll move around the office. Maybe we'll get to read it too. Yeah. All right. Obi gets first dibs because he was in the right place at the right time, guys. Hampton's Trader pattern book. I'm almost done with trading in the zone. Have a long-term flight next week. I want to start a new book. What I would say to you, get on that John J. Murphy book, Technical Analysis of Financial Markets. It really teaches all the basic principles for TA. It's considered kind of like the Bible of TA, or at least the Bible for noobs. You know what I mean? And you get everything. You get Elliott wave theory, you get Dow theory, you even get point and figure charting. Everything that you really kind of need to wet your beak on with respect to rudimentary understanding is mentioned in that book. The beautiful thing about that book, though, is it cites all the sources that it uses in the different chapters. So when you get to the chapter on Elliott wave theory, it'll point you in the direction of a more thorough book to get into. And so that would be what I would suggest there. But we're at 1:59.
Yeah.
So I'm going to send it to my girl Adara here, and she's going to send you guys off.
Yeah, shout out to Northwestern Canopy Development in the chat. I do not think this has to do with, I just don't think it has to do with this, but need Confluence. We're going to send you over to the Confluence King right now. And Sean, the Katina Manashrif says, so we will send over there. We'll be back tomorrow, same bad time, same bad channel for some more lessons. Brendan's at the big desk.
Hey guys, welcome back in. 2 o'clock on a Thursday afternoon that's turning into a bit of a negative one. We were discussing, if you joined us early on this morning,